Illustration number 1. Salaries head. Raj Kumar has following receipts from his employer: basic, DA, commission, motor car for personal use, expenses met by employer, okay, whatever it is. House rent allowance is getting 15,000 per month, okay. Now find out the amount of HRA exempt. Amount of HRA exempt in the hands of Rajkumar, assuming that he paid a rent of 16,000 per month for his accommodation at Kanpur. Kanpur is not a metro city, okay, no? So 40% of salary will be taken. Rent paid is given 16,000. DA forms part of salary for retirement benefit. The DA which forms part of salary for the purpose of retirement benefit is that DA which is written in contract, no? The DA which forms part of salary for retirement benefits is that DNO which is written in the contract. DA in terms they are saying. Okay. See, this way they will try to confuse you. Okay. Wait. Now Rajkumar exercises the option of shifting out, meaning that is he following 115 BSE or not following? Not following. That means he is going to get HRA exemption. So here in this question, what I will do, please pay attention. In this question, HRA received is how much? 15,000 per month he is receiving. For how many months he is receiving? Is it given in the question? No. So we will assume that he is receiving it for the full year. Yes or no? 12 months. So it will be 1,80,000. Now out of that he is going to claim exemption under section 1013A. And why he is claiming the exemption, sir? Because he is following 115 BSE? No, he is shifting out of 115 BSE. Hence, he is claiming the exemption. Otherwise, you would have shown this amount fully taxable. Yes or no? So, A. Actual HRA. That is how much, friends? 1,80,000. B. I will do 40% of salary. But for this, I will keep one line blank because I am yet to calculate salary. Okay, no? C. Rent paid minus 10% of salary. Again, I will keep one line blank. Why? Because I am yet to calculate salary. Everyone understanding what is happening? Okay. See, 40% of salary and 10% of salary. So now I will first calculate salary. So for salary, I would require basic plus I would require DA in terms plus I would require turnover commission. Okay. Now tell me how much basic salary becoming due in these 12 months? 40,000. And it remains same throughout the year, no? So 40,000 into 12. 40,000 into 12 will be 4,80,000. How much is the DA? DA is 6,000 and they are saying that this is DA in terms. So 6,000 per month into 12 months will give me 72,000. Any turnover commission given in the question? No. No turnover commission given in the question. Commission they have given? Yes, 50,000 per annum. Sorry. 50,000, no? Per annum. 50,000 is 50,000 is turnover commission or fixed commission? Turnover. I will assume it is turnover because if it is fixed, per month amount would have been given. 5,000, 5,000, 5,000, 5,000, 5,000 received on a regular basis. And if they are saying per annum, so for the full year, the commission is this much. It might be what? Turnover commission? Yes or no? So now what is the total? Come on, tell me. 4,80,000 plus 72,000 plus 50,000, 6,02,000. Yes or no? Can I say this 6,02,000 is what? Salary. So if 6,02,000 is salary, so I have to do 40% of 6,02,000 now. Into 40% will be 2,40,800. Now rent paid by me is 16,000 per month in Kanpur, and for 12 months, entire 12 months I would have paid the rent if nothing is mentioned. And 10% of salary, so again I'll take 10% of 6,02,000 only, no salary. So 10% of 6,02,000 will be 60,200, and 16,000 into 12, 1,92,000. 1,92,000 minus 60,200 will give me 1,31,800. Everyone getting this? Hello? A, B or C? Whichever is lower. Come on, which is the lowest amount? 131,800, no? So exemption under section 1039 will be 1,31,800, which I will be taking from my HRA. How much was my HRA? 1,80,000. Out of that I am taking exemption of 131,800. 48,200 will be my taxable HRA. Yes or no? Tell me yes or no. Understood? Sure? In the question, no, they have not told you to calculate taxable HRA. Please check the question. They're telling you to calculate what? Find out the amount of HRA exempt. And what you have calculated? Hello? Taxable, no? But to calculate this taxable amount, have you calculated the exemption? Yes. So they are just telling you to calculate this amount. That's it. Hello? But we have gone one step ahead. What if they would have told you to calculate the taxable amount? Then we would have calculated this amount exempt, and we would have taken the exemption out of the HRA. Then our taxable amount should have been this much. When they are asking you to calculate taxable amount, calculate this. And when they are asking you to calculate the exemption amount, calculate 131,800. Hello, sir. You have to read the question properly, huh? Okay. So this is first question on HRA. Yes. Yesterday there was some technical issues at my end. So today, touch wood, since morning everything is going on fine. Okay. So we will start now. In the last lecture, we completed the discussion of allowances. Not the entire part, but majority of the part we have completed in the last lecture. Okay. So in that discussion, we were doing HRA. Okay. So in HRA, we did one question also. And one question I gave you to try out at home. I hope you have tried it. Okay. And there might be some problem in that question. You must have faced those problems. Okay. So what I'll do, I'll start that question today. Okay. And after that question, what I'm going to do, I'm doing the balance part of the allowances. Okay. So pay attention now. So that question was question number 1 from your test your knowledge section. It was your question number 1. See this question. Mr. Mohit is employed with XY Limited on a basic salary of rupees 10,000 per month. He is also entitled to dearness allowance at 100% of the basic salary, of which 50% is included in salary as per terms of employment. Meaning that whatever basic you are getting, 100% of that you are getting as DA. Of which 100% of your basic you are getting as DA. Of which 50% is included in terms of employment. Meaning that 50% is in terms of DA. And the balance 50% will be not in terms. So if salary is 10,000, 100% of 10,000 will be 10,000. So you are going to get 10,000 rupees DA. Of which 50% is in terms and 50% is not in terms. Okay. Next one. The company gives him HRA of rupees 6,000 per month, which was increased to 7,000 per month with effect from 1st January 2025. Meaning that I was thinking that the HRA for the full year is same. So I'll be able to calculate the HRA exemption for the full year. But now I cannot do. Because my HRA amount has been changed from January. So I will have to do the calculations for December. Till December. For these 9 months, my calculations will be different. Because for these 9 months, April to December, the HRA is 6,000. And from January onwards, I will have to calculate differently. I will have to do separate calculation. Because the HRA is changing. It is becoming 7,000. Okay. Next one. Yes, he also got an increment of 1,000 per month in his basic salary with effect from 1st February 25. So I was thinking that those 3 months, Jan, Feb and March, I'll be able to calculate together. But I cannot do that also. Even though for Jan, Feb and March, the HRA is 7,000, that is same. But friends, for those 3 months, my salary is not same because my salary is changing from February. So what I will be doing for the month of January, I will be making separate calculations, and February and March, I will be making separate calculations. Okay. Next one. Rent paid by him during the previous year 24-25 is as under. April and May, you have not paid the rent at all. Meaning that the first 9 months, when my HRA was 6,000. During those 9 months, I thought that I will be able to make the calculation for these 9 months together. But I will not be able to do that also. Because for the first 2 months, there is no rent paid only. That means for the first 2 months, entire HRA will be taxable. No exemption. Then at least from June till December, 7 months, I will be able to do the calculations. But I cannot do that also because from June month, I have started paying rent in Ghaziabad. Okay. And I am paying that rent till December? No. After December? No. I am paying that rent only till October. So June to December I will not be able to do together. June to October I will have to do together. Because from November onwards my rent is changing to 8,000 and the location is also changing to Delhi. Now they are asking you to compute gross salary assuming that he exercises the option of shifting out. Shifting out means 115 BAC not followed. If 115 BAC not followed, will I be able to get the exemption of HRA? The answer is yes. Okay. So after taking HRA, whatever taxable HRA will come, that taxable HRA plus basic plus DA, total will give me gross salary. That I am supposed to calculate. But if they tell you that the assessee is not shifting out of 115 BAC, he is following 115 BAC. In that case, my entire HRA will be taxable, entire basic will be taxable, entire DA will be taxable. There will be no exemption of HRA. Total will be my gross salary. Getting my point? So what we are doing now? We are going to solve the question. We are going to solve the question and saying that the assessee is shifting out of 115 BAC. Right? Pay attention. I'll make the computation. Computation of gross salary for previous year 24-25, that is assessment year 25-26 for Mr. Mohit, who is individual and nothing is mentioned, then he is ROR also. Okay. And he is not following 115 BSc. He is shifting out. Done. Assuming this, my gross salary is calculated. Now, here I will write particulars. And here I will write amount. Pay attention. First one is basic salary. So can I say 10,000 per month is my basic, which I am going to receive till January, till 10 months. Okay, no? So 10,000 per month for 10 months plus 1,000 rupees increment in the basic from February onwards. So from February onwards, my basic will be 11,000 per month into 2 months. So 11,000 into 2 will be 22 plus 1 lakh will give me 1,22,000 basic salary. This is taxable for this year. Now next one is my dearness allowance. Now dearness allowance is 100% of basic, no? It is 100% of basic. So can I say dearness allowance is given in terms as well as not in terms? So whatever is my basic, 100% of that is DA. And whatever is DA, out of that 50% is in terms. And that I am going to receive for the full year. Yes or no? And the same calculation for not in terms also. Not in terms, 1,22,000. 100% of that I will get DA. And whatever DA I am getting, 50% of that will be not in terms for 12 months. So this will be 61,000 and this will also be 61,000. Now I will have to calculate HRA. And for that HRA, I will be doing a working note. Taxable HRA. Okay. I will write taxable HRA rather. Taxable HRA. So this amount I will calculate from a working note and I will put that amount here and then I will total what I will get, gross salary. Okay. So to get this gross salary, my taxable HRA should be correct. Okay. Now, let's do the calculations for HRA. Please try and understand. Can I say February and March calculation can be done together? Why? Because for these 2 months, HRA amount is same, 7,000. Salary is also same, basic DA in terms and turnover commission. Rent is paid in Delhi, amounting to 8,000. But I will have to do the separate calculations for January month. Why? HRA is 7,000 only. But the salary is different in January because salary is increasing from February. So till January my salary will be different. Even though the rent is paid in Delhi, rent is also 8,000. But since the salary will be different for January, I will be doing the separate calculation for January. And anyways, I have to do the calculation for November and December separately. Why? Because for November and December the salary is same. Whatever salary I will be getting in January, I will be getting that same salary in November and December. But don't you think my HRA amount was different here? From January it is 7,000, but for November and December the HRA till December was 6,000 only. Hello? Even though I was paying rent in Delhi, but my my HRA was different in these 2 months. Okay. And for June to October, I will do separate calculation. Why? HRA is same, 6,000. Salary is also same. Basic DA in terms turnover commission. But don't you think the rent amount is 6,000 only and that is paid in Ghaziabad? And from November onwards, I am paying rent in Delhi, amounting to 8,000. So for June to October, my calculations will be different. Now, April and May, my calculations will be different because for these 2 months, I am not paying any rent only. So I will write particulars. In the particulars, I will write HRA received, That is how much? 6,000, 6,000, 6,000, 7,000 and 7,000. These are all per month's amount, okay, no? And once I will calculate, I will multiply the number of months also. But these are all per month's amount. Less exempt under section 1013A. So whatever HRA is received, out of that I will take the exemption A, B, C, whichever is lower. Okay. What is A? Actual HRA. What is B? 40% or 50% of salary. That I will have to take. Limit B. And limit C is rent paid minus 10% of salary. I'm not writing the entire stuff because of the limitation of space. Okay, no? Are you all understanding? These three limits you already know. Okay. So, lower of A, B and C will be my exemption. So, this will be my exemption. I will call it B. And this is HRA received. I will call it A. Out of HRA received, I will take exemption. Whatever balance remain, that will be my taxable HRA. So how will I get this taxable HRA? I will do A minus B. A is HRA minus exemption. B is exemption. Yes or no? And I will multiply number of months over here. And then I will get the final answers. Okay. Now I will have to fill in the blanks. Ready everyone? First 2 months, this is not applicable. HRA exemption will be nil. Why? Because for first 2 months, there is no rent paid. So 6,000, there is no exemption. How much HRA taxable? Full HRA taxable for first 2 months into 2 months. 2 months. 6,000 into 2 will give me 12,000. So 12,000 taxable HRA for first 2 months of my previous year. Next one, June to October, actual HRA, it was how much? 6,000. Now June to October, I will take 40% of salary because the rent is paid in Ghaziabad, non-metro city. For that I need salary. So first I will calculate salary. Salary for HRA exemption will be basic plus DA in terms plus turnover commission. So starting from April till December, my basic is 10,000. 100% of that is DA. 10,000 is DA also. But out of that only 50% is in terms, no? So only 5,000 will be DA in terms. And there was no turnover commission here. So salary from April till December, salary will be 15,000. And this will be the salary for the calculation of HRA exemption. And from January to March, my salary is increasing by 1,000, meaning my basic will be 11,000 and DA will be 11, but out of that only 50% is in terms. So 5,500 will be my DA in terms. This will be dash. So 16,500. Now I have to see that I am making the calculation for which months? June to October. So what is the salary for June to October? April to December the salary is 15. So definitely June to October salary is 15 only, no? Hello? So 40% I have to take 15,000, 40% of 15,000 I have to take. And that amounts to, fortunately, even that amounts to 6,000. Then, what is the rent I have paid from June to October? 6,000 rupees in Ghaziabad. Out of that 6,000, I will reduce 10% of my salary. Salary is 15,000, 10% of that 1,500. 6,000 minus 1,500 will give me 4,500. So what is the lowest amount? 4,500, that will be exempt. So out of 6,000, 4,500 exempted, how much will be taxable? 1,500, and this is taxable from June to October. How many months? 5 months. So for these 5 months, the taxable HRA will be 7,500. Getting my point? Likewise, I have to fill in the blanks. Sure. Come on, tell me. November to December, actual HRA is 6,000. And my salary is also same, 15,000. November to December, my salary is same, 15,000. But now I will not take 40%, now I will take 50%. Why? Because from November, I have started paying rent in Delhi. So 50% of salary needs to be taken now. So 50% of 15,000 will be 7,500. So I will write 7,500 here. Understanding? Rent paid is 8,000 in Delhi. And 10% of salary will be 1,500. So 8,000 minus 1,500 will give me 6,500. A, B, C, whichever is lower, 6,000. So out of this 6,000, if 6,000 is exempt, how much is taxable? Nil. Nothing is taxable for 2 months. November and December. So taxable HRA for November and December will be nil. Hello? Now coming to January. January, my HRA is changing. So actual HRA is 7,000. Salary will remain same, 15,000. Rent is paid in Delhi. So 50% of 15,000. Hello? Will be 7,500. This will remain same. And rent paid minus 10% of salary, 8,000 minus 1,500 will be 6,500. Did you check only limit A changed? A, B, C, whichever is lower, 6,500. So can I say out of this 7,000, 6,500 will be exempted, 500 per month will be taxable only for the month of June, meaning for 1 month. So for January month, my taxable HRA will be 500. Now coming to February and March. February and March, HRA is 7,000. But my salary is changing. It is becoming 16,500. Now can you check? 16,500, I will do 50% of that. Why? Because for February and March also rent is paid in Delhi. So 50% of salary. But now the salary is 16,500. So 50% of 16,500 will be how much? 8250. Yes or no? Rent paid is 8,000 only in Delhi. But now 10% of salary will not be 1,500. 10% of salary will be 1650. So 8,000 minus 1,500? No. 8,000 minus 1650. That will give me 6350. Got it? Now lowest is 6350. So out of 7,000, 6350 will be exempt. 650 will be taxable. And this will be taxable for how many months, friends? 2 months. February and March. So 1,300 will be taxable over here. Did you calculate the taxable HRA for all the months? Now can you add all of them? You will get 21,300. Please check. This is my taxable HRA. So in my gross salary, I will have to show how much? 21,300, and this is from that working note. Got it? Now can you add all the 4 figures? 244 plus 21, 265,300. Did you get it? 2,65,300 will be my gross salary. If this kind of question comes, will you be able to solve it? They have tried to make it complicated, but it is actually not complicated, very easy. So this way we are going to solve this question. Understood? Sure everyone? Shall I move ahead? Okay. Mr. Ravi retired on 15 June 24 after completion of 26 years and 8 months of service. If I say number of years of service for POGA, then it will be 27 years. but not covered by POGA, only completed years of service. Ignore 8 months, will take only 26 years. Right? Next. Received a gratuity of 15 lakhs. So can I say that this gratuity he is receiving on retirement? This is death cum retirement gratuity. At the time of retirement, his salary was basic salary, dearness allowance given. Out of the dearness allowance, 60% is for retirement benefits. The DA which is used for retirement benefits is DA in terms. Yes or no? And remaining 40% is not in terms, right? No? Next, commission is 1% of turnover, and turnover in the last 12 months, last 10 months, no. Last 12 months turnover they have given. 1 crore 20 lakh. Of that, 1% will be what? Turnover commission. Bonus is given 25,000 per annum. Compute is taxable gratuity. Highlight this. What they want to tell you, what they are asking you to calculate, taxable gratuity. If you will calculate only exemption and give no, your answer is wrong. Take the exemption out of the gratuity and tell us how much gratuity is taxable. They want you to calculate that taxable gratuity. Okay, so pay attention over here. See, what is the name of the assessee? Mr. Ravi. So if I say A, Ravi is a non-government employee, plus he is covered by POGA also. Okay. Now, gratuity received on retirement is how much? 15 lakhs, no? 15 lakhs? Yes. Less exempt. Under which section the exemption is given? 1010. Remember this section, okay? How much is the exemption? A, actual amount, which is 15 lakhs. B, maximum limit under section 1010. The entire 20 lakh limit is available to him, yes or no? He has not taken exemption earlier. So this 20 lakh he is claiming for the first time. Okay. Now see, limit C. Is he covered by POGA? So I will write POGA limit over here. What was POGA limit? 15 by 26 into last drawn salary per month into years of service. Yes or no? Into number of years of service. Wait, I will have to first calculate the last drawn salary. So last drawn salary will be the month of retirement, ignore that. He is getting retired on 15 June, no? Ignore June. Prior to that, May month, how much basic he was getting? Come on, tell me. He was getting a basic of 50,000. And how much DA he was getting? 10,000. In terms also I am supposed to take, not in terms also. Full 10,000 I am supposed to take. So basic plus DA, 60,000. So his last drawn salary is 60,000 per month. So 15 by 26 into 60,000 into years of service I am to take. 26 years, 8 months. Meaning 27th year also he is providing service. In the 27th year, he is providing services for more than 6 months. Yes. Then 27th year will be counted as a full year. Right? Now if you will calculate, you will get 60,000 into 15 into 27 divided by 26, you will get 9,34,615. 9,34,615. Did you calculate the three amounts? Yes. Whichever is lower. And this amount is lower. So exemption under section 1010 will be this much. 9,34,615, and this amount is exempt out of 15 lakhs. Yes or no? So how much will remain now? Minus 15 lakhs, you will get 5,65,500 and 5,65,385. 385. This is the taxable amount of gratuity. This is what they want you to calculate. Everyone got this amount? Sure. Now the second part, same calculation, same thing. What I will do here, I will put a cross mark, not covered by Payment of Gratuity Act, and everything will remain same except for this C part. This will change, and as a result of that, everything will change. Okay, no? So I will do 15 by 30 into average salary per month, okay, into completed years I will take now. So completed years I know 26. I know 15 by 30 also. Now I will have to calculate the average salary. If you calculate this correctly, your answer will be correct. Okay, no? See, average salary is 66,000. Very good, Akshaya. Very good. See, I will take basic of 10 months immediately preceding to month of retirement. So month of retirement is June. Prior to that 10 months, May, April, March, February, January. So for those 10 months, basic was same only, no? 50, 50, 50, 50. Was there any change in the basic? No. So 50,000 into 10. 50,000 into 10. The basic for last 10 months was 5 lakhs. Now I will have to take DA in terms only. Only in terms DA I will take. So see, 10,000 was my DA. Out of that, 60% was in terms. And last 10 months, 6,000 only I was getting, no? Entire 10 I was getting. So I was getting 6,000 only, no? For the last 10 months. So it will be multiplied by 10. I will get 60,000 what? DA in terms. Now, turnover commission, they are saying that it is 1% of the turnover, which is 1 crore 20 lakhs. Now tell me, this 1 crore 20 lakh is the turnover for the last 12 months. So whatever commission I will get, this will be for 12 months I will get. So I will have to divide it by 12 and multiply by 10. Then only I will get 10 months commission. Getting my point? So this will be, if I am not wrong, this will be 1 lakh rupees. So total will be 6,60,000. Now I will divide by 10. I will get 66,000 per month. This is my average salary. Everyone got this average salary? I will write 66,000 over here. Now, please make the calculation. 66,000 into 26 into 15 divide by 30. I will get 8,58,000. 8,58,000. Now tell me, amount which is exempt will be lowest of these three. This is the lowest. 8,58,000. So out of 15, now 8,58,000 will be exempt. How much will be taxable? 6,42,000. This will be taxable amount. Done? Do the same calculation at home. Make the presentation, proper presentation. Amount, particulars, okay, covered by POGA, not covered by POGA, like this. Now, the C part they are saying, Ravi is a government employee. Now don't see POGA or not POGA. So can I say gratuity receipt 15 lakhs? I will write less fully exempt under section 1010 15 lakhs. So what will be the balance amount? Come on, tell me. Nil. Done. Easy or not? Sure? Perfect. Very good. Come on. Mr. Sagar, who retired on 1st October 2024, is receiving 5,000 per month as pension. On 1st February 25, he commuted 60% of his pension and received 3 lakh as commuted pension. You are required to compute his taxable pension, assuming he is a government employee, private sector employee receiving gratuity, and is a private sector employee, did not receive any gratuity at the time of retirement. Okay, very good, easy. For example, he is a government employee. Okay, so government employee or a non-government employee. First of all, what we will do? First of all, we will calculate his uncommuted pension. Uncommuted pension. Okay. So tell me, how much he was supposed to get? 5,000 per month. His date of retirement was 1st October 2024. So can I say for October, November, December and January, for 4 months he received this 5,000. So 5,000 into 4 months, this is from November to January. Okay, 20,000. Then on 1st February he commuted 60% out of this. So 5,000 which he was supposed to receive for February and March also, which he will not receive now because he has already commuted 60%. So he will get only 40% for February and March, 2 months, Feb and March. So can I say here he will get 4,000? So 20,000 plus 4,000, the amount will be 24,000. Yes or no? Amount will be 24,000. This will be taxable. Now wait, if we assume that he is a government employee, if we assume that he is a government employee, for government employee this is fully taxable. But he is a government employee getting the commuted pension also, no? So I will have to write down commuted pension which he took 3 lakh rupees. Now out of that he will get the exemption under section 1010A. How much? Full 3 lakhs. Full exemption for commuted pension. Yes or no? So how much will be taxable? Nil. So here total taxable pension for him, if he is a government employee, is 24,000 only. Only the uncommuted part. Any problem till here? Now what I will do? Wait. I will copy this part and I will paste it. Now what changes I will do? Come on. Please pay attention. I will write down non-government employee plus he is receiving gratuity also. So will it affect my uncommuted pension or it will remain same? It will remain same. It is going to affect this amount. Getting my point? Now I am not going to get full exemption. Now the exemption will be A, either the commuted pension amount, or B, maximum one third of fully commuted pension. So if 3 lakh is received by commuting 60%, how much he will receive on commuting 100%? 5 lakhs. 5 lakhs divided by 3, he is going to get how much? 1,66,667. 166,667. Done? So either this amount or 3 lakh, whichever is lower, he is going to get the exemption of 166,667. So out of 3 lakhs, if this amount is exempt, how much is taxable, friends? 1,33,333 plus 24,000 will give me 1,57,333. This is the taxable pension for him. Yes or no? Now the same thing I will copy. See, copy and next page I will paste. Okay. See what changes I will make now. Come on. Now he is not receiving gratuity. So this 1/3 will not be calculated. Only half will be calculated. So this amount will change. Okay, no? So now he is not receiving gratuity. Now instead of 1/3, I will do half of fully commuted pension will be how much? 2,50,000. So 3 lakh or 2,50,000, whichever is lower, 2,50,000. So can I say out of 3 lakh, 2,50,000 will be exempted. So how much will be taxable? 50,000 will be taxable. 50 plus 24 will give me 74,000. This is the total taxable pension. Did you check the answers? Same answer? Easy? Difficult? Made easy. Come to question number 5. Mr. Gupta retired on 1st December 2024 after 20 years of service and received a leave salary of rupees 5 lakh. Other details of his salary income are given. See, whatever details are given, no, this much salary he was receiving prior to his retirement. So when he got retired, at the time of retirement, he is getting this much salary. So basic 5,000 he is getting right now, which was increased 1,000 in the month of April. After increasing 1,000 in April, it became 5,000, 5,000, 5,000, 5,000, which he is receiving right now. So prior to April, his basic was not 5,000, it was 4,000 only. Understanding? This was the only catch. So last 10 months, what was the basic which I was receiving? At the time of retirement, I am receiving 5,000, 5,000, 5,000, 5,000, 5,000. But they are saying that basic was something else which was increased by 1,000 and then it became 5,000, no? Which you are receiving right now. Meaning that basic prior to 1st April 2024 was not 5,000, it was 4 only. 4 increased by 1 became 5 and which you are receiving since April till the date of your retirement. So last 10 months prior to the date of retirement, can I say November, October, September, likewise April to November, 8 months, your salary was 5,000 basic. And basic prior to that for the month of March as well as February, because I will have to take from February till November, 10 months. Hello. So basic was, come on, tell me, did you understand? So basic salary 4,000 into 2 for February and March plus 5,000 into 8 from April to November, and that will give me 48,000. Now tell me, during the last 10 months, the DA did not change. DA remained 3,000 only. Out of that, only 60% is in terms, meaning that 1,800 during the last 10 months you have received as DA in terms. 1,800 multiplied by 10 will give you 18,000. Hello sir, 18,000 how did you get? Understood now? Next one, commission they have given. Sir, they did not say that commission is what? Turnover commission or fixed commission. So we assume that it is a turnover commission. Your assumption can take you nowhere. Because if this is per month commission, every month the commission amount is 500, 500, 500, 500. No. So if the amount of commission is not changing every month, it is a fixed commission. No need to say also that it is fixed. Per month return, it is an indication that it is a fixed commission, not a turnover commission. And if you have taken this commission in the calculations, you are wrong, gone. There is no turnover commission, only fixed commission is there. Then you are getting bonus also. Leave availed during the service is how many? How many days? 480 days. And your employer was giving you 30 days leave every year. Leave entitlement means employer was giving 30 days every year. So as per employer's rule, 30 days is there. Hello. As per IT rules also 30 days is there. Whatever leave credit will come in both the case will be same only, no? No need to make two calculations, make one calculation only. So can I say for every year you are getting 30, so 20 years of service into 20 years, total was 600 days, and out of 600 when you reduce 480 you will get 120 days. Now divide it by 30. Can I say 4 months leave credit is there? This 4 months leave credit will be used for the purpose of exemption. And by the way, for these 4 months only, you are receiving leave salary also. Got it? Now tell me, average salary can you calculate? Basic is 48,000, DA in terms is 18,000, no turnover commission. So it is 66,000. 66,000 divided by 10, you will get average salary 6,600 per month. Yes or no? Average salary done and leave credit also done. You will be very well be able to calculate the exemption now. Now wait, if you are a government employee, what will be your taxable leave salary? It will be 5 lakh minus 5 lakh, it will be nil. Okay, no? Taxable leave salary will be nil. But if you are a non-government employee, I will have to take 4 limits. A, actual amount 5 lakhs. B, maximum limit which is 25 lakhs. Now C, I will take 10 months salary. 10 months salary meaning 10 months into average salary will be 10 months salary. That will be 66,000. And limit D will be leave credit multiplied by average salary. Come on, tell me, 26,400. Are you getting 26,400? Everyone. Now, which is the lowest one? 26,400 is lowest. And out of 5 lakhs, if you are a non-government employee getting 5 lakhs, so your exemption is not full exemption. For you, exemption is only 26,400. So how much will be taxable in that case? 5 lakhs minus 26,400, you will get 473,600. This will be the taxable leave salary for you if you are a non-government employee. Understood everyone? Easy or difficult? Difficult. This was difficult. And where you committed mistake, you know. Will you commit that mistake again? Sure? Okay, perfect. Illustration number 9. I will start. Mr. Datta received voluntary retirement compensation of 7 lakhs after 30 years and 4 months of service. He still has 6 years of service left. 6 multiplied by 12 will be 72 months of service balance. Okay. At the time of voluntary retirement, he was drawing basic salary 20,000. DA, which forms part of pay, means DA in terms 5,000. Compute his taxable voluntary retirement compensation, assuming that he does not claim any relief under section 89. If they would have told you that he is claiming relief under section 89, then your answer that taxable VRS compensation is 7 lakhs. No exemption available. But is he claiming relief under section 89? No. So can he claim the exemption now? Yes. How much? A, B, C, D. Whichever is lower. Come on. Tell me. What is A? A is actual amount, no? Actual amount 7 lakhs. B is maximum 5 lakhs. C is last drawn salary per month. Last month's basic, last month's DA in terms and turnover commission. Turnover commission not given. Basic and DA in terms given. That is 20 plus 5,000 will give you 25,000. So 25,000 into 3 into number of completed years. That is 30 years. So you are going to get 22,50,000 over here. Everyone got this? And D is what? Last known salary only. But what? Balance months of service. That is 72 months. And here you are going to get 18 lakhs. Lowest of all these four. 5 lakhs. This will be your exemption out of 7 lakhs. So taxable voluntary retirement compensation will be 2 lakhs. Got it? Done. 2 lakh is your final answer. Sure? 2 lakh. Mr. C is a finance manager in ABC Limited, meaning that he is not a government employee, non-government employee. The company has provided him with a rent-free unfurnished accommodation in Mumbai. Okay. In Mumbai, the company is giving accommodation. No rent is charged. And unfurnished. Rent-free unfurnished accommodation. So what will be there? Only we will calculate the value of accommodation. No need to calculate the value of furniture. No need to reduce any amount of rent. Whatever value we will calculate, that value itself will be taxable value. Yes or no? But wait. Is the accommodation taken on rent by the employer? Are they telling you that employer is paying this much rent, taking the accommodation on rent and giving that accommodation to you? Meaning that this accommodation must be owned by the employer. If the accommodation is owned by the employer in a place where the population is more than 40 lakhs, can I say Mumbai will definitely have a population of more than 40 lakhs as it is a metro city? See, in case of other cities, no, for which population cannot be known by a normal person. How would I know that what is the population of Udaipur? Will I know? How would I know what will be the population of Madurai? Because these are not metro cities. Yes or no? Their population can be more than 15 lakhs, but up to 40 lakhs. Or their population can be less than or equal to 15 lakhs also. So they will definitely give me the population for those type of cities. But when it comes to what? Metro cities, no, they will deliberately not tell you that how much was the population. Because as a CA student, you should be having such small amount of, common sense, no? That since this is a metro city, it will definitely have a population of more than 40 lakhs. Or sometimes, see, if other cities also said no, still they will not give you what? Population. Why? Because in that city, employer was not giving own accommodation. He was taking an accommodation on rent and he was giving. So there we don't have to see the population also. Getting my point? So if you would require the details of the population, no, they will definitely give you the population details. Otherwise, it will not be given. Understanding? So tell me. Now basic salary he is drawing 8,500. Dearness allowance 2,000 per month. Out of it 30% is for retirement benefits. The DA which is used for retirement benefits is DA which forms part of salary as per salary contract. Yes or no? That is DA in terms. Next one. Bonus is given 1,500 per month. Even though the company allotted the house to him on 1st April 2024, he occupied the same only from 1st November 24. Meaning that since when he will start getting the benefit? Since the time when he occupies or since the time the accommodation was allotted on his name? Occupied. Company can allot at any time, no? So after company is allotting, am I going and staying there? Am I occupying? No. So if I am not occupying company's accommodation, I am not taking any benefit from the company. I will take the benefit from the company only after I occupy, no? So I will always count the number of months for which the accommodation was occupied and not the number of months for which it was allotted. Yes or no? So it was occupied from 1st November till 31st March. How many months? 5 months, no? 5 months the accommodation is occupied. So whatever salary which will become due for these 5 months, starting from November to March, that salary I have to take, except 5 things if you remember. Yes or no? Now pay attention. What they are telling you? They are telling you to calculate the taxable value of perquisite for assessment year 25-26. Very simple. To calculate taxable value, I know that since the rent-free, what did I say? Rent-free unfurnished accommodation is provided in Mumbai. So can I say this accommodation in Mumbai was owned by employer? And if it is in Mumbai, can I say Mumbai has, as per 2011 census, Mumbai has a population of greater than 40 lakhs? So the accommodation which was given, owned by the employer and given in a place where the population is more than 40 lakhs, for this accommodation, how much is the taxable value? Come on, tell me. 10% of salary. Now I know that I have to calculate this amount because this amount is a taxable amount. First of all, identifying this amount is very important. Huh? And then the calculation of this amount becomes more important. Sometimes people identify wrong. Mistake done. Even though the calculations are correct, no marks because identification is wrong only. Sometimes identification is correct, but the calculation becomes wrong. Then also 0 marks for this. Both the things should be happening correctly. Identify what amount should be taxable and then calculate that amount correctly. What amount should be taxable? 10%. Identification done correctly. Now tell me how to calculate this amount. I will have to take the salary which becomes due for the period for which the accommodation was occupied. And that salary will include everything except 5 things. Can I include basic salary? The answer is yes, I will include basic. Can I include DA? Yes, but I cannot include the entire DA. I will have to include only 30% DA because that is in terms DA. Yes or no? So I will include 2000. No. 30% of 2000 is 600 per month. Can I include bonus? Tell me yes or no. Yes, bonus is to be included. Nowhere it is mentioned that don't include bonus. So include bonus. See, even though you cannot say that, see, bonus becoming due in this period. Sometimes the bonus can be for earlier period also. Yes or no? Forget about that. Since the bonus is taxable on what basis? Receipt basis. So if that bonus is received in the period in which the accommodation was occupied, it will be assumed as if it is becoming due in that period only. Getting my point? Sure. Next one. So what will be there? 8,500 on your calculators, please. 8,500 plus 600 plus 1,500. These three amounts are 10,600. So can I say my salary per month is 10,600? And now 10,600 I have to take for 5 months. That is for the period for which the accommodation was occupied. For those 5 months, I am getting how much basic? 8,500. For those 5 months, I am getting how much DA in terms? 600 per month. For those 5 months, I am getting how much bonus? 1,500 per month. So instead of doing everything into 5, I will take the total and I will do into 5 once only, no? Hello? So 10,600. This is 10,600 into 5 months. Into 5 will give me 53,000. Did you all get this? 53,000. So now 53,000 is what salary? 53,000 is salary for those 5 months for which the accommodation was occupied. So salary is 53,000. 10% of that will be how much? 5,300. This is the taxable amount. How did you get 6075? Did you understand your mistake? Sure. This should be 5,300. Please check the answer. 5,300. Got it? Now read. The note is important. Please read. Read this note. Important. They are saying even though the accommodation was allotted with effect from 1st April. Older okay. So you have old study mat. Ayyo. So download a new one from the ICAI website. Don't refer that old study mat. Okay, no? Yes. Because the law is also changed. There are many changes which are there in the new study mat. Getting my point? Okay. Wait. See. Did you get this 5,300? And why for 5 months you have calculated salary? The logic is given in this note. Okay. Now, in the same example which is given above, 14th example, 14th illustration, They are saying that using the data given in the previous illustration, compute the value of the perquisite if Mr. C is required to pay a rent of 1000 per month. Ayo. Same accommodation, if rent free given, how much is the taxable value? 5300. But for that same accommodation, if the employer is charging 1000 rupees rent per month, so 1000 into 5, 5000 rent is recovered? No. So benefit given how much? 5300. Out of that, how much benefit taken away? 5000 in the form of rent the employer is taking away. So how much balance? Come on, tell me. 300. That 300 will be the taxable value in this case. Hello, sir. Check the answer. 300 is the taxable value. Did you get it? So first calculate the value of the accommodation. If rent is not charged, then this value is taxable. But if for this accommodation rent is charged, reduce the amount of rent, no? So this was the value for 5 months. So rent for 5 months will be reduced. 5 months for which the accommodation was occupied. For that 5 months only I will give 1000 rupees, no? Understanding? Should I move ahead? Now they are saying that using the data given in illustration number 14. Illustration number 14. Compute the value of perquisite if ABC Limited has taken this accommodation on lease rent of 1025 per month and Mr. C is required to pay a rent of 1000 per month to the company for the use of this accommodation. Now wait. Now the accommodation provided in Mumbai does not belong to employer. It is taken on rent by the employer. And how much rent the employer is paying for that accommodation? 1025 per month. So now 10% of the salary will be calculated, which will be 5300 only. Hello. Now you don't have to see the population of the city. Just take 10% of the salary. And that will definitely come 5300 only, no? And now compare this amount with actual rent for 5 months paid by the employer. Whichever is lower, that will become your benefit. So can I say here the value of the accommodation will be 10% of salary. So 10% of the salary in the above illustration was how much? 5300 only, no? Or actual rent paid by the employer, and that is 1025 into 5 will give you 5125. Now whichever is lower, this lower amount is 5125, this value will be taxable. But wait, if the rent is not taken by the employer, then this value will be taxable. But they are giving in the question that for this accommodation the employer was charging 1000 rupees per month. So what you will do? Will you charge this entire amount? Or 5000 recovered will be reduced? Will be reduced, no? So reduce that 5000 out of here. You will get 125. 125 rupees taxable. Please check the final answer. 125. Can you see? Everyone, easy or difficult? Easy, no? Now the same thing. See, illustration number 17. They are saying that if ABC Limited has provided television whose WDV is 10,000, cost is 25,000. Forget about the WDV. If you will take WDV, you are gone. We are supposed to take 10% of the actual cost of the furniture. Yes or no? So television is given. Actual cost of that television I have to see. Next one, and 2 air conditioners. The rent paid by the company for the air conditioner is 400 per month each. Wow. Television was provided on 1st January 2025. However, Mr. C is required to pay a rent of 1000 per month to the company for the use of this furnished accommodation. Not for the furniture, but for the furnished accommodation. So simple, no? What they are telling you? Let's see. Accommodation which was given in which example? They are telling in the illustration number 14. So from 14, accommodation was RFUA. That accommodation remains same, but along with that, furniture is given, TV and ACs are also given. So now value you have already calculated for the accommodation in illustration number 14. That value only you are supposed to take. But along with that, you are supposed to add the value of the furniture, meaning the television as well as the AC also. No, for television, the value will be 10% of the actual cost because it was owned by the employer and given to you. 10% of the actual cost. And how much is the actual cost? 25,000. So can I say here that the value of accommodation is how much? 5,300. That we have already calculated. What is that? 10% of salary. Now in that I will have to add value of furniture which is owned by employer. And what was the furniture owned by the employer? TV, no? TV. So 10% per annum of actual cost, which is 25,000. But if you will calculate this, this will be the full year's value. Are you supposed to tax full year's value? Or only the value for those many months for which you are actually using the TV? Actually using, no? So you are using the TV from 1st of January. So this value will be into 3 upon 12 because this value will be for the entire year. Divide by 12, multiplied 5, those 3 months for which the TV was given. So this value is 10% into 3 divided by 12 will be 625, no? 625. Sure. Now that furniture which was taken on hire by employer. Is there any such furniture? Yes, sir. There are 2 ACs. And for one AC, 400 per month is given. So for 2 ACs, how much will be given? 800. And such AC will be used for that period only, no, for which you are occupying the accommodation. If nothing is said, accommodation is occupied for 5 months. So for 5 months only in that accommodation you are going to use these ACs, no? So for ACs, please don't calculate 12 months figure. For ACs also it will be 5 months. Okay. So into 5. Tell me. 800 into 5 will be 4,000. Now 4,000 plus 5,300 plus 625 will be 9925. This is the total value of rent-free furnished accommodation. If for this furnished accommodation nothing was charged, this will be taxable for you. But the question is saying that for this furnished accommodation, the employer is charging how much? 1,000 rupees per month. So 1,000 per month into 5. This is the amount recovered, 5,000 that you reduce. So you will get 4925. This is the taxable value. Under the salary statement, you are supposed to show 4925. Got it? Will you be able to solve the questions like this now? All the questions, all the possibilities you have covered. Done, friends? Easy, no? So now if the accommodation facility comes in the question, no, calculation has to be done like this. First identify correctly, calculate like this, and whatever value you have calculated, you show this value taxable under the salary statement. But wait, this value you will be able to calculate only after finishing the entire salary question. Because to calculate this value, except 5 things, all the salary has to be taken. So always calculate this value in the end of this question. Yes or no? End of the salary question. Will you remember this? Sure, everyone? Should I move ahead? Very good. There are 2 employees, Mr. X and Mr. Y. They are working for Gamma Limited. As per salary fixation norms, the following perquisites were offered. To Mr. X, Mr. X who engaged the domestic servant, meaning that domestic servant is not provided. Now you are engaging your domestic servant. Employee is engaging domestic servant. This domestic servant, the payment of the salary to this servant will be obligation of Mr. X. It will be the liability of Mr. X. And how much is the salary? 500 per month. Now his employer reimbursed the entire salary paid to the domestic servant 500 per month. Now they are saying that you are required to comment on the taxability of above in the hands of Mr. X and Y who are not specified. Even if Mr. X is not a specified employee, no, this perquisite will be taxable for him. Why? Because this is not clause 3 perquisite, this is clause 4 perquisite. So what I will do here, I will write down here the perquisite is 17 subsection 2 clause 4, okay, and even if X is specified employee or a non-specified employee, in both the cases the perquisite will be taxable. In both the cases the perquisite will be taxable. And in the second case, this perquisite is 17 subsection 2 clause 3 perquisite. Why, sir? Why? See, Mr. Y was provided with a domestic servant at rupees 500 per month as a remuneration package, meaning that don't engage your servant, we will provide you domestic servants. So who will engage the servant? Employer will engage and give that servant to you. In that case, this is not clause 4, this is clause 3 perquisite. Domestic servants will be provided. Servants are given. Now, what will you do? This is clause 3 perquisite. If Mr. Y is a specified employee, then only that value of 500 per month will be taxable. And if he is a non-specified employee, then this will not be taxable. Here it will be taxable, and here it will not be taxable. Done? Easy, no? Now if you read the answer, you will get the same explanation. Should I move ahead? Okay, very good. Come on. 22. AB Company Limited allotted 1000 sweat equity shares to Sri Chand in June 2024. See, June 24, the shares were allotted, meaning the allotment done in my previous year, 24-25. Now, the shares were allotted at 200 per share as against the fair market value of 300 per share on the date of exercise of option. See, the date of exercise of option would be some other date. As on that date of exercise of option, the fair market value per share was how much? 300, and these were given to you for how much? Only 200. So exercise price was 200. The fair market value was computed in accordance with the method prescribed under this act. Very good. You have calculated as per the method prescribed and given it to us. So we'll be using that 300 only. Okay. So what we are going to do? We are supposed to take 300 per share, no? 300 per share minus 200 the exercise price. So total will be 100 per share. This 100 per share will be your benefit. Multiplied by how many shares? 1000 shares. You are going to get 1 lakh rupees as the perquisite. What is the perquisite value? Sir, 1 lakh is the perquisite value. Yes or no? And when this 1 lakh will be taxable? This will be taxable in the previous year 24, 25, because these shares are allotted to you in June 2024. That is previous year 24, 25. So this 1 lakh will be taxable in previous year 24, 25. Getting my point, everyone? Now, in the case of subsequent sale of these shares by Srichand, what would be the cost of acquisition? So you are supposed to write down to determine the cost. The cost of acquisition will not be equal to actual cost, that is 200 into 1000 equal to 2 lakhs. You are not supposed to take this 2 lakhs. Here in case of such type of shares, 49(2)AA is applicable, and as per 49(2)AA, the fair market value as on the date of exercise of option, which was how much? 300 multiplied by 1000 shares, rupees 3 lakhs. This will be treated as the cost of acquisition. So whenever in future these shares will be sold, to calculate the capital gain of these shares, 2 lakh actual cost will not be reduced, 3 lakh the fair market value will be reduced, so that this 1 lakh does not get taxed again in the form of capital gain. Got it? So this was the answer. This will be given here. Okay. Come to question number 2. Mr. Shrikant has 2 sons. He is in receipt of children education allowance of 150 per month for his elder son and 70 per month for his younger son. Both his sons are going to school. He also receives the following allowances: transport allowance 1800 per month, tribal area allowance 500 per month. Compute his taxable allowances. Now please pay attention. They have not mentioned that Shrikant is following 115 BSE or he is not following 115 BSE. So we will be calculating our answers in both the ways. What if he is following 115 BSE? What if he is not following 115 BSE? Okay. Now let's say if Shrikant is following, this is solution number 2, no? Shrikant is not following 115 BSE. First of all, not following 115 BSE. Okay. Now tell me, he is receiving which allowance first? Children education allowance. Okay. So children education allowance, how much he is getting? For first child, elder son, he is receiving 150 per month for 12 months. So 150 into 12 will be 1800. Out of that, exemption will be available under section 1014. And 1014 exemption will be available for children education allowance if you are not following 115 BSE. Yes or no? Then how much exemption will be available? 100 rupees per month per child. So for this child, 100 rupees will be exempt. 100 into 12. 1200 will be exempt. So how much will be taxable? 600. And for younger son, he is receiving 70 rupees, no? Only 70. Yes, 70 rupees per month into 12. So it will be 840. And exemption will be how much? Come on, tell me. Exemption will be entire 70, no? Because allowance is received which is less than 100. So the amount received will be exempt. 70. 840. How much will be taxable? Nil. So this was children education allowance. Along with this, he is getting what? Transport allowance. Transport allowance of 1800. See, transport allowance means from office to residence, residence to office, whatever commute happens. For that, whatever allowance is received, that is either commutation allowance or transport allowance. If Shrikant would have been a handicap employee, then this 1800 would have been exempt. because there the limit is 3,200. Do you remember? But nothing is mentioned. That means Shrikant is not a handicap employee, meaning that he is not going to get any exemption. It will be fully taxable. Okay. So second allowance is transport allowance, that is 1800 per month into 12. So 1800 into 12 will be 21,600. That will be fully taxable. Now after transport allowance, he is getting tribal area allowance. Tribal area allowance 500 per month into 12 month, and that amount is 6,000. Now out of this he is getting exemption also under section 1014, and that exemption will be 200 per month for tribal area allowance. Do you remember this? Into 12, that will be 2,400. So balance 3,600 will be taxable. Sure. Any other allowance received by him? No. All the allowances done. So 21,600 plus 600 plus 3,600. Taxable amount will be 25,800. If he does not follow 115 BSE, then this amount will be taxable. Then taxable allowances will be this much. Now if he follows 115 BSE, will he get exemption for children education allowance? No. In that case, please pay attention here. Now color, blue color. 115 BSE is followed. Then this exemption will not be available. Then entire 1800 will be taxable. Done. This exemption will not be available. Entire 840 will be taxable. Transportation allowance anyway is fully taxable. And this tribal area allowance exemption will also not be available. Yes or no? So this will be entire 6,000 taxable. So tell me how much amount will be taxable now? 1800 fully taxable, plus 840 fully taxable, plus 21,600 fully taxable, plus 6,000 fully taxable. The total will be 30,240. This will be the total taxable allowance. Easy, difficult? Understood? Illustration 2 done. Please check your answers. This is 25,800 and this is 30,240. We got the same answers. Okay. Okay. Now let's move on to the another question. This 20th question is to be done now. Okay. Now this is a full-fledged question on your salary computation. In this question you will be having retirement benefits also, gratuity, pension, leave salary, everything you will have here. And along with that, perquisites will also be there. Okay. So we are going to solve this question. Mr. X retired from services of Y Limited on 31st of January 2025, meaning in the current previous year, he is leaving the job, retiring. So till the date of his retirement, he is going to get basic, allowances, perquisites, whatever he will be getting till 31st January for 10 months only. So once he will retire, he is going to get retirement benefits also. So what retirement benefits he is getting? They are saying that, see, he is retiring on 31st January after completing service of 30 years and 1 month. Meaning that he worked in this company for 30 years and 1 month and then he is retiring right now. And he joined this company on 1st April 1995. At that time his age was 30 years. So can I say 30 that time plus 30 more years, he is a senior citizen right now. So becoming a senior citizen and leaving in this year. Okay. Next one, received the following on his retirement. So gratuity he is receiving and covered by POGA also. He is receiving leave encashment 3,30,000. Okay. So this leave encashment is also received on his retirement. Then as per the scheme of the company, he was offered a car which was purchased on 30th of January 2022 by the company for rupees 5 lakhs. So this 5 lakh rupees was the actual cost of the car to the company. And the company bought this car in 2022. This car was offered to him, meaning this car was sold to him. When he was getting retired, no, so company told him at the time of retirement, you want to take this car from us, take this car from us. And the car was offered for 2 lakh, meaning this is sale of movable asset for 2 lakhs. So you'll have to first find out the value of this car, and then out of that value you will reduce 2 lakhs, and then you are going to get what? Then you are going to get perquisite value for transfer of movable asset. Yes or no? Now company depreciates the vehicle. Very good, very good. Company depreciates the vehicle at the rate of 15% on straight line method. I don't want to know that at what rate the company is depreciating the vehicle. To value this perquisite, motor car depreciation will be reduced at 20% WDV only for every completed year of use. So this information is deliberately given so that you take the depreciation at 10% on SLM. Getting my point? So while calculating salary, you will be valuing the perquisite. To value that perquisite, this depreciation rate and this method is not allowed. Only 20% WDV is allowed, and for every completed year of use. WDV basis. Hello, everyone. So ignore this information. This information is given to what? Confuse you. Okay. Next one. Then he is getting commuted pension also after commuting 2/3 of his monthly pension. Company presented him a gift voucher. Company presented him a gift voucher worth 6,000. He is getting gift, meaning he is getting a perquisite. Gift voucher means gift in cash, no, gift in count. Voucher means gift in kind, and the gift in kind is amount more than 5,000. So we can either charge it fully taxable 6,000, or we can charge 1,000 also. What we will be doing? We will be charging only 6,000. Okay. Then we will write a note that alternatively 1,000 can also be charged. Next one. His colleagues. Okay. Colleagues gifted him. Now colleagues means employer gifting or others gifting. Others. So this is not employer. Now the employer is not giving you gift. So this gift cannot come in salary head. Therefore, this is not your income from salary, first of all. So who is gifting? Colleague. Colleague means persons other than employer. So whenever you get gift from persons other than employer, that goes in income from other sources. And under the head income from other sources, it will be taxable if it is a gift of specified movable asset. And by the way, this you don't know right now. You will come to know in IFRS chapter that only few movable assets gift you receive, that will be taxable under the head IFRS. That is P for paintings, J for jewelry, D for drawing, A for artwork, A for archaeological collections, S for sculptures, and S for shares. P. J. Das. What did I say? P. J. Das. Paintings, jewelry, drawings, artwork, archaeological collections, sculptures, and shares. Any of these movable assets received by you as a gift, only then it will be taxable under the head IFRS. And their value should also be more than 50,000. This will go to IFRS, but IFRS will not allow this gift to enter. Why? Because number one, this is not a specified asset. This is a television, not a specified asset. And the second reason is the value is only 50,000, not more than 50,000. Getting my point? So two reasons. Because of that, it will not come in IFRS also. It will be ignored. Understanding? Salary forget, because it is not coming from employer. It could have been taxed under IFOS, but it will not be taxed under IFOS also. Why? Because number one, it is not a specified asset, and number two, its value is also not more than 50,000. Got it? Sure, everyone? Now let's see. Following are the other particulars. He is receiving basic salary of 20,000 and 50% DA per month, meaning that 50% of this basic only he is getting as what? DA. Okay, so 50% will be 10,000 per month. Okay, for the period from 1st April 2024 to 31st January 2025. Now see, in the answer which the institute has solved, in this answer, they have assumed that DA is not in terms. They have assumed, because it is not given in the question that whether DA is in terms or not in terms. So while solving the answer, the institute has taken an assumption that it is DA not in terms. Hello sir, but we will not take that assumption. We will say that this DA is in terms. We will write down a note for this, that in the absence of any information regarding the DA, we have assumed that DA is in terms, and I will prove also that this DA should be in terms only. I will prove also. Okay. But see, institute is very smart. What institute does you know? Institute has made the solution by taking DA not in terms. But in the end you will see they have also given a note that alternatively, if the DA was taken as in terms, then the answer would have been this much. Getting my point? Which we are anyways going to get, because we are assuming what? DA in terms only. And here we have to take this DA as in terms only, because only then it will be logical answer. I will prove that why I am taking in terms. I will prove that. Okay. So what we are going to take DA as in terms. Okay. Next one. Received pension of 5,000 per month from February to March after. They have written what? After. After means some monthly pension was promised. Out of that monthly pension, see above, you have commuted 2/3. After commuting 2/3, you are receiving 5,000. This means that your monthly pension was not fixed 5,000, it was fixed 15,000. Out of that 15,000, you commuted 2/3 and you received what? Lump sum. Now after commuting 2/3, how much remains? 1/3, no? 15,000 into 1/3 you will get 5,000 only. That 5,000 you are receiving after commutation. Okay. Meaning that your monthly pension was how much? It was 15,000. Entire monthly pension you commuted, or only 2/3 commuted? Only 2/3 commuted, and you got that lump sum of 3 lakh rupees. Getting my point? After commuting 2/3, this 1/3 which remains is 5,000 only, which you are going to receive for February and March. And fortunately, you did not receive 15,000 for a single month. The moment you got retired, on 31st January, on 1st February itself you commuted. See, on 1st February only you commuted. And from 1st February you are getting what? This 5,000. Getting my point? Now pay attention. Compute is what? Gross total income. They are telling you to compute gross total income, meaning that 5 heads, that will include salary also, that will include all other 4 heads, clubbing also be done, set of carry forward also to be done. Then there will be a total, that will be a gross total income. That you are supposed to calculate. Now you are supposed to calculate, assuming that he exercises the option to shift out. Shift out of default tax scheme means, is he following 115 BSE or he is not following 115 BSE? He is not following 115 BSE. Okay. So first things first. Come on, tell me. First things first, Pay attention, everyone. See, First of all, I will make a small timeline so that you understand what things are going on. This is my previous year, okay, no? So in my previous year, starting from 1st of April 2024 till 31st of January, till 31st of January 2025, he was working. So first, beginning of the previous year, what he is getting from the employer? Come on, tell me. When he was in employment, beginning of the year, what he was getting? He was getting basic and he was getting DA. How much basic he was getting? Come on, tell me. He was getting a basic of 20,000. 20,000 he would have received for how many months? 10 months. So 20,000 into 10, 2 lakh rupees of basic in this year will be taxable as this year's salary. So you will make a statement. Computation of gross total income of Mr. X for the assessment year 25-26. He is receiving a basic salary of 20,000 into 10 amounting to 2 lakh rupees taxable. Any problem here? So you will make a salary statement. In that salary statement, you will write basic salary. In the bracket 20,000 per month into 10 months, 2 lakh rupees outer column taxable. Done everyone? Next one. He is receiving DA also. How much DA? 50% of basic. So how much was basic? 2 lakh. 2 lakh, 50% of that 2 lakh will be 1 lakh. That 1 lakh will be DA. Now wait. 50% of basic salary is DA and note. In the note, we will write that this is DA in terms. And why we have assumed in terms, I will tell you. Okay. This is DA in terms. Please remember. This is DA in terms. And DA in terms or not in terms, it is always taxable. Yes or no? Okay. Now tell me. On retirement, he is getting gratuity also. He is getting gift also. He is getting perquisite also. Whatever he was supposed to receive till retirement, he has received. Till retirement, he was supposed to receive basic. We have already taxed. Till retirement, he was supposed to receive what? DA. We have taxed that. Now he is getting retired on 31st of January. He is retiring on 31st of January. So on 31st January, what all things he is getting on 31st January? Number one, he is getting a gift voucher of rupees 6,000 from the employer. Please check. That 6,000 gift voucher is a perquisite. So first we are charging what? First we are charging basic, then DA, then we are charging perquisites now. So out of the perquisites, one perquisite is receiving gift. Gift in cash or gift in kind? Gift in kind. Gift voucher, gift in kind. The value is more than 5,000. Entire 6,000 will be taxable. So see, we have entirely taxed this 6,000. Okay. And here we will write a note. What? That alternatively, since the amount of gift in kind is more than 5,000, we have taxed the gift entirely. Alternatively, the excess amount can also be taxed. Understanding? Now, second thing, he is getting a car also. Car is transferred to him on his retirement only. But that is a perquisite for him, no? That is not a retirement benefit, that is a perquisite. But that perquisite is given at the time of retirement. Understanding? So what was the actual cost of the car? Come on. Actual cost of the car was 5 lakhs. Please check. Actual cost was 5 lakh. Adjustment number 3. Okay. I have already completed adjustment number 5. Now I am on adjustment number 3. They are saying that cost of the car was 5 lakhs. This car was purchased by the employer on what date? 30th November 22. Now please pay attention. 30th November 22 to 30th November 23. 1 year of use. 30th January. 30th January 22 to 30th January 23. 1 year of use. Then 30th January 24. 2 years of use. 30th January 25. 3 years of use. And then on 31st January 25, he is retiring. And on that 31st January 25, he is given this car. So can I say, after using for full 3 years, and on the immediately next day, the car is given to him for rupees 2 lakhs. So for 3 years, the wear and tear will be reduced. At what rate? 20% WDV basis. So 1,80,000 and 64,000 will be depreciation, wear and tear for these 3 years. And if you reduce this, out of 5 lakhs, you will get 2,56,000. And that 2,56,000 worth of car you are getting on your retirement for only 2 lakhs. So on retirement, you are getting a perquisite of 56,000. Got it? So that 56,000 we are going to tax over here. And how did we get this 56,000? Please check this note. Purchase price 5 lakh. Depreciation first year 1 lakh. WDV 4 lakh. Depreciation second year 80,000. WDV 3 lakh 20. Depreciation for the third year 64. WDV as on 29 January 25. Okay. From 30th January to 29th January, 1 year will be completed. And again from 30th January, second year will start. Getting my point? So on 29th January 2025, the WDV was this much. And this car was given to you on 31st January 2025 for rupees 2 lakh. So this was the value, 2 lakh was there, 56,000 will be the perquisite value. And this 56,000 will be taxable. Okay. Now please pay attention what they have written. The rate of 15% as well as the straight line method adopted by the company for depreciation of vehicle is not relevant for calculation of perquisite value of the car in the hands of Mr. X. Hence the same is ignored. Getting my point? Hence the same is ignored. Done. Now please pay attention. We'll go to the next part. Gift voucher done. Now the transfer of car is also done. Now on retirement he is getting gratuity also. Is he covered by POGA? Yes. A non-government employee receiving gratuity. Hello. And he is covered by POGA also. Will his gratuity be exempt? The answer is yes. Under which section? 1010. How much? A. Actual amount of gratuity, which is nothing but 6 lakh. B. Maximum 20 lakh. Gratuity limit is 20 lakhs. And C. 15 by 26 into last drawn salary per month into number of years of service. So 15 by 26. Now I will have to check last drawn salary. So forget about the month of retirement. January forget. Immediately prior to that month, the salary I have to take. That is last drawn salary. So the month immediately preceding to the month of retirement was it was December. So in that month, what was the basic? It was 20,000 only. And what was the DA? It was 10,000 only. DA in terms also I will have to take. DA not in terms also I have to take. Because the employee is covered by POGA. So if the employee is covered by POGA, I take basic and DA both, na? Whether that DA is in terms or whether that DA is not in terms will not make any difference. So DA was 10,000 and basic was 20,000. So 20 plus 10 will give you 30,000. Last drawn salary you got. And now number of years of service was 30 years and 1 month. Ignore 1 month, we'll take only 30 years. So 15 by 26 into 30,000 into 30 years. Do the calculation, come on fast. So 30,000 into 15 divided by 26 into 30 years will give you 5,19,230. So 6 lakh or 20 lakh or 5,19,230, whichever is lower. 5,19,230, this will be exempt. Out of 6 lakh, we'll take this exemption. So out of 6 lakh, if we take this exemption, 80,770 will be our taxable gratuity. 1 rupee rounding off. 1 rupee rounding off I have done. But they have taken what? 80,769. You take 80,769 or you take 80,770, one and the same thing. 1 rupee rounding off we have done because of that point answers. Okay. Hello sir. So 80,770, are you all getting this? So how this was calculated? See, a note is given. Gratuity received 6 lakh. Exemption under section 1010 will be least of the following. This is notified limit 20 lakh, actual gratuity 6 lakh, 15 by 26 into last on salary for 30 years will be 5 lakh 19,231. This 5 lakh 19,231 being the lowest of 3 amounts will be exempt out of 6 lakh. 80,769 will be exempt. Hello. Got it? Now pay attention. Gratuity is done. So this point number 1 is done. Now second point, pension we will be doing. Pension. Okay. How much is the uncommuted pension? Come on, tell me. 15,000 pension was promised to you per month. But are you ready to take that 15,000? No. You told your employer that, see, I am retiring on 31st January. You are telling me that you are going to give me how much? 15,000 per month pension. I don't want this 15,000. I want to commute 2/3, and instead of that, give me some lump sum. So after commuting 2/3, 1/3 still you are receiving, no? For February and March. That was 5,000. Hello. That was 5,000, which was 1/3 after commuting. That is the reason why I came to know that before commuting, the monthly pension was fixed 15,000. Reverse calculation. Getting my point? So, out of 15,000 monthly pension, 2/3 commuted for a lump sum, and 1/3 you are still receiving after commuting is 5,000 per month. 5,000 into 2, February and March. That will give you uncommuted pension. 10,000 fully taxable. Hello, sir. So 10,000 uncommuted pension we will charge here. 10,000 uncommuted pension. See, taxable. Okay. Now, is he receiving commuted pension also? Employee is a non-government employee receiving what? Commuted pension of rupees 3 lakhs. Yes or no? This part. Fourth one. He is getting a commuted pension of 3 lakhs. Full monthly pension commuted or only 2/3 commuted? So from this, can you calculate fully commuted pension? Yes, if 2/3 is commuted and 3 lakh is received, what if the 3/3 meaning full was commuted? Cross multiplication. If 2/3 was commuted and you are getting what? 3 lakhs. What if the full meaning that 3/3 was commuted? How much pension you would have received? Can I say 4,50,000? 2/3 will be divided. 3 lakh into 3/3 divided by 2/3. 3 will come up upside. So 3 lakh into 3 will become 9 lakh divided by 2 will be 4,50,000. That is a basic math, huh? Basic maths. You have to learn this. Okay. So 4,50,000 was fully commuted pension. If he would have commuted full amount of pension, he would have received how much? 4,50,000. But is he receiving full pension? No. He is receiving only 2/3 and receiving how much? 3 lakh. So can I say 3 lakh is the amount of pension which he is receiving? It is 3 lakh is income. Out of this 3 lakh, he will get exemption under section 1010A. Exemption will be either the actual amount 3 lakh or maximum 1/3 of fully commuted pension. Hello. Why 1/3, sir? Because he is also receiving gratuity on retirement. See. So the non-government employee also receiving gratuity on retirement, for him, the commuted pension can be exempted to the extent of maximum what? 1/3 only, no? 1/3 of what? Fully commuted pension, which you have already calculated now. So I will do 1/3 of this. So that will give you 1,50,000. Now tell me one thing. 1,50,000 is the maximum limit, or the 3 lakh which you are actually receiving, whichever is lower. 1,50,000 will be exempted. So out of the 3 lakh which you are receiving, 1,50,000 is exempt. So how much will be taxable? Commuted pension taxable will be 1,50,000. Please check. See, 1,50,000 commuted pension taxable. Now whatever catch is there, no, the catch is here. Please pay attention. This is very important discussion which I am going to do now. Leave encashment. See here, how much answer institute is getting? 1,30,000. But we will be getting only 30,000 taxable. We will be getting only 30,000. Institute is getting 1,30,000. And in the note below, the institute is saying, even if you are getting 30,000 taxable leave encashment, no, still your answer is correct. Because in that case, you would have assumed that DA is in terms, then your leave salary taxable will be 30,000 and not 1,30,000. Then accordingly, your salary and everything will change. Hello, sir. So we will do that calculation. Please pay attention. Please pay here. See, leave encashment. This encashment is for 330 days leave balance, and this was calculated on the basis of 30 days leave entitlement. No, 30 days was there, no? Yes, 30 days leaves allowed by employer. Wait everyone, please pay attention over here. Employer was giving you every year 30 days leave. It is given in the question. On the basis of 30 days, for 30 years, you would have received how much? 900 days leave. Hello. Out of that 900 days leave, which was allowed in 30 years, you took few leaves, and whatever leave remains in your balance, this is leave credit. Can I say this leave credit is nothing but 11 months leave credit? 330 divided by 30 will be 11 months leave credit. So this 11 months leave credit is calculated on the basis of 30 days leave allowed by the employer. Hello? How much is the maximum leave allowed as per income tax rules? That is also 30, no? So if as per income tax rules, we would have calculated leave credit, even that leave credit would have been 11 months only. Hello? Your employer is saying that take 30 days leave for every year. Employer is giving 30 days leave for every year. How many years of service you have given? 30 years of service you have given. So in 30 years you would have got 900 days leave, no? Out of that, some leaves you have already taken, and then 330 days leave remaining. Again divide by 30, you will get what? 11 months. This your employer was giving. So how much leave you would have taken? Out of 900, how much leaves you would have taken to get 330 days balance? Balancing figure. So 900 minus 330, meaning that you would have taken 570 days leave. This was a balancing figure. Hello. This balancing figure is nothing but the leave taken by you during these 30 years. Leave allowed was 900. Out of that you took 570. Then remains what? 330 days. And if you divide by 30, you will get what? 11 months leave credit. This 11 months leave credit is calculated on the basis of leave allowed by employer, which was 30 days only, no? If you calculate the same as per IT rules, so here IT rules also says that maximum 30 into 30 is equal to 900 minus 570 is equal to 330. Hello sir. Divided by 30, you will get 11 months. So as per IT rules also you are getting 11 months, no? Why both are coming same? Because for both the leave allowed was 30-30. So no need to do two calculations, no, do one calculation only. As per employer's rule, whatever leave allowed was equal to IT rules. So as per employer's rule, whatever leave credit is there, that same leave credit will be as per IT rules also. So how much leave credit as per IT rules? 11 months. How much leave credit as per employer's rules? 11 months. 11 or 11, whichever is lower. 11. That leave credit of 11 months we will take for exemption. Yes or no? So now do you remember 4 limits? If the leave salary is received by an employee who is a non-government employee. If the leave salary is received by the employee who is a non-government employee. How much leave salary he is getting? Come on, tell me. Leave salary on retirement was 3,30,000. Out of that, he will get exemption under section 1010AA. How much exemption he will get? A. Actual amount received. Actual amount, no. That is 3,30,000. B is what? Maximum limit available for exemption. That is 25 lakhs. Do you remember for leave salary the maximum limit was 25 lakhs? And what is limit C? 3 months salary. No, 10 months salary. 10 months salary. But for that, I will have to first calculate average salary, and then average salary multiplied by 10, I will get what? 10 months salary. And then limit B, I will have to calculate leave credit multiplied by average salary. Leave credit I have calculated that it will be 11 months. Here I have to take 10 months, but I don't have average salary amount. Now average salary I will calculate. And here only the catch is there. In this average salary, I have to take what? Basic, DA in terms, turnover commission of 10 months including the month of retirement. Hello? So my month of retirement was January. So including January also and earlier 9 months also, I will take basic of all these 10 months. I will take DA in terms for all these 10 months. I will take turnover commission of all these 10 months. Basic was including January and earlier 9 months. The basic was 20 every month. So basic will be how much? Come on, tell me. Basic will be 20,000 into 10 is equal to 2 lakhs. Yes or no? Now I will have to add what? DA in terms. Now what was the DA? 10,000. But they are assuming that the DA is not in terms. So they are not taking this DA here. But we are assuming that DA is in terms. So we are going to take that DA over here. Hello sir. So DA was how much? 10,000. 50% of basic into 10, which will be 1 lakh rupees. Now what was the turnover commission? We read the entire question. Was there any turnover commission? The answer is no. There was no turnover commission. So do I have the 10 month salary now? It was 3 lakh rupees. Now 3 lakh divided by 10, I will get 30,000 per month as what? Average salary. And they would have got average salary of 20,000 only. Because as per them, DA is not in terms. But as per my understanding, it is DA in terms. So I have taken that DA also. So accordingly, my average salary is 30,000. Now pay attention. Do you have average salary now? Do you have this average salary? Average salary I will put here 30,000. And average salary I will put here also. So this will be 3 lakhs. And this will be 3 lakh 30,000. Everyone got this? A, B, C, D. Whichever is lower. So I will get this 3 lakh as what? Exempt. So out of 3 lakh 30, I will exempt what? 3 lakh. My taxable leave salary will be how much? 30,000. Did you all know this? 30,000. So in my solution, if I come, will I write 1 lakh 30 here? Or I will write only 30? I will write only 30. This is the only amount which is different for me and for my institute. So if this 30,000 I am taking, so then this salary which is there, no, this will be reduced by 1 lakh. I am not taking 1 lakh 30 as taxable. I am taking only 30,000 as taxable. So my salary will reduce by 1 lakh. So it will be 6 lakh 32,769. Out of that I will get 50,000 standard deduction. Okay. And I will get 5 lakh 82,729. This will be my final answer. Got it? Whereas the institute is getting how much? 1 lakh more. Now 1 minute. 1 minute. Everyone should focus now. If I ask you one thing, you are getting leave salary on your retirement. So can I say leave salary which you are getting is a retirement benefit? Now 2 minutes, forget this thing. DA we discussed. Do you remember DA? 2 types of DA. The DA which is written in terms of your contract will form part of salary to calculate your retirement benefits. Remember, DA which is not written in terms of contract will not form part of salary to calculate your retirement benefits. So leave salary is your retirement benefit, no? Leave salary is your retirement benefit. How much leave salary you are getting? 3 lakh 30. How much leave salary you are getting? 3 lakh 30. That 3 lakh 30 you are receiving for how many months? 11 months? 330 divide by 11, you will get 30,000. Meaning that your employer has given you retirement benefit of 3 lakh 30 based on 30,000 salary. And that 30,000 includes basic and DA. Why he is going to include that DA? Because he is definitely going to cover that DA in the contract. Hello? If the DA was written in contract, that is the reason why DA, basic, both are taken. 30,000 multiplied by 11. You are getting that 3,30,000. This is a pure indication that the DA is in terms. Getting my point? You ask this to anyone, they will not be knowing all these things. Institute has done what? See, 20,000 they have taken. And then later on they came to know that it is a blunder. What they are doing? They are not applying this much mind also. See, if the employer is giving leave salary, which is what? Which is a retirement benefit. To calculate the retirement benefit, leave salary for 11 months, they have taken a salary of 30,000. So salary 30,000, based on the 30,000 salary, 11 months benefit, 3,30,000 is given. So if salary 30,000 is taken, in that 20,000 basic is also taken and 10,000 DA is also taken, no? So 10,000 DA taken, 10,000 DA forming part of salary to calculate your retirement benefit. That DA has to be DA in terms. That goes without saying. No need to do any assumption also. Getting my point? So in your notebooks, write down this paragraph or somewhere near this question, write down the paragraph which I am dictating right now. Please write down. In the given question, since the leave salary amounting to rupees 3,30,000 which was given for 11 months leave credit, amounting to 3,30,000 which was given for 11 months of leave credit, is computed based on 30,000 per month salary, in the bracket write down 20,000 basic plus 10,000 DA. Full stop, close the bracket, full stop. Hence, it is a clear indication that the DA was given in terms of contract. It is a clear indication that the DA was given in terms of contract, forming part of salary to compute the retirement benefits, forming part of salary to compute the retirement benefits. Hence, no need to assume that it is not in terms. No need to assume that it is not in terms, comma, it is clearly DA in terms. Full stop. Done? Sure? Okay. Now see what the institute has done. On your page number 3.92 now, they have made the calculations. They have taken only 20,000. Can you see? And they are saying that DA not in terms we are assuming. And in the note they are saying alternatively the DA can be assumed as in terms, and in that case the gross total income will be 6,32,769, which we have already calculated. Hello sir, done? No? Sure. So this was the question. Now see, in this question, no, you have right now calculated what? This amount which you have calculated is your taxable salary after taking standard deduction. But since you did not have any other heads of income, so other heads of income will be nil. No clubbing, no set off. So salary, this much amount. After taking standard deduction, this much amount. Other heads, nil. No clubbing, no set off. So total will be the same, which is your salary income. That only will become your gross total income, which they are telling you to calculate. Understanding? Shall I move ahead? How was this question? Interesting, no? Mark this question important. Before exam, you have to compulsory see this question because this includes many things. Perquisites, few perquisites are also covered. Retirement benefits are also covered. Okay. So we are moving on to the next question now. Okay. Pay attention. Do the markings. Miss Akanksha, a salaried employee, furnishes the following details for the financial year 24-25. So Akanksha happens to be my sister, my younger sister. Her name is Akanksha. Till this question came to me, I was not aware that she is already employed somewhere. I came to know from this question that she has got a job. Okay, I will have to congratulate her because ICAI study mat is telling me that my sister has got a job. Wow, wonderful. So I'm very happy for her. But equally sad also that she did not tell me. But wait, she is earning a basic salary of 6,20,000. My God. She is richer than me. 6,20,000 basic salary. DA also she is getting. 4,20,000 DA. My goodness. Commission also she is getting. 75,000. Entertainment allowance of 9,000 she is getting. This time she is not going to get anything from me in Raksha Bandhan. 100% I'm not going to give her anything because she is richer as compared to me. Oh my God. Oh yeah. So what we are going to do for my sister Akanksha, you are supposed to tell me that her basic salary is taxable for her or not taxable for her. Taxable, no? So write down T for taxable. Write down it is T for taxable. So whatever statement of salary we will prepare, in that statement of salary, the computation of taxable salary for Akanksha will be there. Okay. The first income will be basic salary 6,20,000 taxable. Everyone. But wait, no. In the last part, you will see that they are mentioning you that she pays tax under default tax regime. What, friends? She pays tax under default tax regime, meaning that 115 BAC she is following. Can you do me a simple small favor? Today, after solving this question at home, assume that 115 BAC is not followed and then see what are the changes. But right now we are solving as if she is following what? 115 BAC. So under the default tax regime, she is calculating her salary income. So salary income, basic salary will be taxable, no? Whether 115 BAC followed or not followed will not make any difference. Wherever the difference will come, that time we are supposed to be, alert. Okay. Basic salary T for taxable. Dearness allowance T for taxable. Okay. Now this time, we can assume in terms also, not in terms also. We will see later on if there is any hint. Then based on that hint, we can consider that in terms. But if no hint is given, so we have full authority to take it in terms as well as not in terms. Sure? Let's see later on. But whether it is in terms or not in terms, it is going to be taxable only. Next one, commission. Commission will also be taxable. She is getting an entertainment allowance, 9,000. That will be taxable. But wait, for the entertainment allowance, the deduction under section 16 clause 2 is usually available. But it is available to which employees? Government employees. Is she a government employee? See, she is a salaried employee, and nowhere it is mentioned that she is the employee of a government, meaning that she is a private employee. So for private employees, no sir, 16 clause 2 deduction is not available. But sir, if it is not given and if we assume that she was a government employee, then also she is not going to get. Why? Because she is following 115 BSc. Under 115 BSc, she is not going to get any deduction other than standard deduction. So 16 clause 2, even if she was a government employee, was not available to her. Understanding? But wait. At your home, you will do the same calculations. Assuming that she is shifting out from 115 BSc, not following 115 BSc, that time also you are not supposed to take it. Why? Because she is not a government employee. Getting my point? Okay, next one. Medical expenses reimbursed by the employer. See, whenever the employer reimburses the medical expenses, no, that is a perquisite. That is a medical facility which I am going to explain you tomorrow. But right now, please remember only one thing. Whenever the employer will reimburse the medical facility bills for treatment done in India, and that treatment was done in government hospital, recognized hospital or employer's hospital, then that benefit will be fully exempt. So treatment must be done in India, and that treatment must be done in government hospital, recognized hospital or employer's hospital. For that treatment, if the medical bills are reimbursed, medical facility is given, then that facility is fully exempt. Now tell me, are they telling you that the treatment was done outside India? No. That means the treatment would have been done in India only. But if the treatment is done in India, in government hospital, recognized hospital or employer hospital, they will definitely tell you. Are they telling you that the treatment was done in government hospital, recognized hospital, employer hospital? Meaning that now this medical facility will not be exempted. This will be fully taxable. So what we are going to do? We will tax it as a perquisite. T for taxable. Okay. Next one. Professional tax of this 50% paid by the employer. Meaning that, see, 4,000 total professional tax is paid. 50% of that is paid by the employer. Meaning that, can I say 50% is how much? 2,000 rupees paid by the employer. And the professional tax, which is your professional tax on your behalf, it is paid by the employer. Don't you think 17 subsection 2 clause 4, your obligation met by employer? This is a perquisite for you. So first of all, this 2,000 will be T for taxable. T for taxable. Entire 4,000 is not taxable because entire 4,000 is not paid by the employer. Only 2,000 is paid by employer. That 2,000 will be taxable. Now, the 4,000 of professional tax which is paid in this year, 2,000 paid by the employer, 2,000 paid by you, 4,000 totally paid in this year, no, will be allowed as a deduction under section 16 clause 3 only if you are shifting out of 115 BSc. But are you in 115 BSc? Yes. So this will also not be allowed. Understanding? So only one effect has to be given. What effect? Only 2,000 will be taxable. That's it. So for that 4,000 which you are going to get as a deduction under 16 clause 3, that will not be available because you are following 115 BSc. Understanding? But at your home, when you will be solving this question, assuming that she is not following 115 BSc, then 2,000 will be taxable and you will take the deduction also under 16 clause 3 amounting to full 4,000. Getting my point? That time you will take 4,000. Understood? Next one. Health insurance premium paid by the employer. See, whenever the employer pays the health insurance premium, in the medical facility only I am going to explain this. Okay. If the health insurance premium paid to the insurance company for your health insurance policy, that is not a taxable perquisite, that is a fully exempt perquisite for you. Okay. So if the health insurance premium is paid by the employer, it must be paid for your health insurance policy only. Is it a taxable perquisite? No, it is a fully exempt perquisite, meaning that this 8,000 will not be taxable for her. This health insurance premium will not be taxable for her. Next one, gift voucher given by employer on her birthday. So whatever gift received at the time of marriage is not taxable, even if coming from the employer. But other than that, whenever the employer will give you the gift, that will be taxable for you, no? If given in cash, will be fully taxable. If given in kind, up to 5,000 not taxable. More than 5,000, two things can happen. Either fully taxable or excess can be taxable. So tell me, is it gift voucher? Yes, that means gift in kind. Amount is 10,000, which is more than 5,000. So entire 10,000 we will tax. And in the note we'll write alternatively excess 5,000 could have been taxed. Yes or no? But we will tax how much? Entire 10,000. Next one, life insurance premium of Akanksha paid by the employer. Do you remember 17 subsection 2 clause 5? Any life insurance policy premium or annuity policy premium of the employee paid by the employer is also a perquisite taxable fully. So this will be a perquisite under 17(2)(5) and this will be taxable. Yes or no? Next one, laptop provided for use at home. Now they are saying actual cost of laptop to the employer is 45,000 and children of the associate are also using the laptop at home. All these informations are given to confuse you. Whether it is provided to be used at home, whether it is provided to be used at, park, whether it is provided to be used at office, will not make any difference. Laptop given for use, computer given for use, the benefit will be fully exempt. Even if it is used at home, even if the children are also using it, will not make any difference. Yes or no? This benefit is fully exempt. So nothing will be taxable. This will be fully exempt perquisite. So the 45,000 cost of that laptop is given will not make any sense to me now. If the value of this perquisite would have been taxable, I would have to take 10% of the actual cost. Am I going to take the 10% of actual cost? No. Benefit is fully exempt. So ignore the cost also. Getting my point? Everyone? Next one. Employer company owns a Maruti Suzuki Swift car which was provided to the assessee both for official and personal use. 1 minute. Employer company owns a car. Car belongs to employer. 2. Car belongs to employer. The use was official and personal. POPP. Partly official, partly personal. And the driver was also provided. Hello. And all expenses are met by the employer. Now tell me, car belongs to employer. You will use. Use benefit will happen. Expenses are also made by employer. Expenses benefit will also happen. 2 benefits. Now this expenses will also include driver's salary because it is also paid by the employer. Yes or no? 2 benefits. If any amount recovered, you reduce. Whatever balance will remain will be fully exempt if the car is fully official. Whatever balance remains, that will be fully taxable if the car is fully personal. No need to calculate this. If the car is partly official, partly personal, a flat amount will be taxed based on the engine capacity of the car. Either 1,800 per month or 2,400 per month. Include 900 extra if the driver was also provided. Partly official, partly personal, flat amount will be taxable. Driver was also provided. Hello. Then 1,800 as well as 2,400 both can be taxed. What I will tax? I will tax 2,400 because the engine capacity of the car is more than 1.6 liters, means more than 1600 cc. Getting my point? So how much I will tax? I will tax 2,400. Yes or no? Plus I will do 900 also. I will add 900 also. This is my per month amount. Multiplied by how many months the car was given? Nothing mentioned. I will assume that it is given for the full year. So the amount will be 3,300 into 12. This will be 39,600. And guys, this 39,600 will be taxable value of perquisite. See, this kind of questions they ask in the exam. Trust me, same question came in the exam few years back. 10 marks. And 10 marks, how easily you can get? Provided you recollect everything on time. And you don't commit silly errors. Okay. Now in this same question, no, I can twist. All the expenses of the car were met by employee. So instead of 2400, I would have taken 900 per month. And 900 also for driver. Because now car belongs to employer, expenses met by employee. So it is 2AC. No, it is 2BC. Two benefits? No, only one benefit. Use benefit. Expense benefit not happening. So higher amount 1800, 2400 will be taxable. No, lower amount 600, 900 will be taxable. And plus also 900 if the driver is also provided. And engine capacity was more than 1600, so I will tax 900 in that case. Understanding, no? Small information they will change. And the entire answer will also change. You have to be very careful while reading the question. Okay, next one. Annual credit card fee is paid by the employer. Do you remember credit card facility? So your credit card annual fees is how much? 7,000, that is paid by the employer. And the credit card is not exclusively used for official purpose. Details of the usage are not available. Meaning that out of this, how much is official, how much is personal is not given. We will assume that entire belongs to personal. Hello? So entire amount of credit card payment made by the employer is your perquisite, will be fully taxable for you. Now, do you have all the taxable amounts? Take your calculator. Take your calculator. On the calculator, take 6,20,000 basic salary. Now take 4,20,000, add 4,20,000. So 6,20,000 plus 4,20,000, add 75,000 also. Add 9,000 also. Add 18,000 also. Don't add 4,000, add 2,000 only. Professional tax paid by the employer. Yes or no? Add 2,000 now. Now don't add 8,000, but you will have to add 10,000. You will have to add 26,000. No need to do anything with 45,000. Now you will have to add 39,600. And last you will have to add 7,000. On your calculator, you are going to get 12,26,600. Are you getting that amount? That 12,26,600, my dear friends, is your gross taxable salary. Out of that gross taxable salary, you are going to get 3 deduction. No, only one, because you are following 115 BSc. What deduction is that? Standard deduction. And 115 BSc standard deduction will be 75,000. Take that standard deduction of 75,000 and now check 11,51,600. That is your net taxable salary. They are telling you to compute income chargeable under the head salary. And this is the income chargeable under the head salary. Got it, everyone? In your textbook, in your solutions, please check the final answer. If the final answer is this much, please check. I will show you. $11,51,600. Did you all get this? Now you just have to present the answer. That's it. Will you be able to do it? And one more way you are going to do. If not following 115 BSc, shifting out. Then where are the changes? I have already explained. Question number 13. Illustration number 13. Come on, pay attention. Compute the taxable value of perquisite in respect of medical facilities. So different medical facilities are given to the employee. The name of the employee is G, Mr. G. Okay. So out of these, how many medical facilities will be exempt? Forget about them. And how many will be taxable? Take them. Get the total, you will get the taxable value of the perquisite. Yes or no? So first one, medical premium paid for ensuring health of Mr. G. Health insurance premium paid by the employer for Mr. G, for employee. Taxable or exempt? Exempt. So not taxable. We'll put across. Treatment of Mr. G by his family doctor. Okay, so treatment is done outside India? No, meaning that the treatment must be done in India only. But this treatment is not happening in GRE, government hospital, recognized hospital or employer's hospital. Hence, this benefit given by the employer will be taxable. Yes or no? It will be taxable. Next one, treatment of Mrs. G in government hospital. Very good. The treatment is happening in India also and government hospital also. And the treatment is happening for specified patient. Mrs. G means spouse. Yes or no? Then it will be exempt. Next one, treatment of G's grandfather in private clinic. First of all, treatment is not happening in GRE. And second, the treatment is also not happening for a specified patient. So this benefit will be fully taxable. Next one, treatment of G's mother, 68 years and dependent parent, meaning the treatment is done for a specified patient. But the treatment is happening in India, not in GRE, by family doctor. Then it will be fully taxable. Yes or no? Next one, treatment of G's sister who is dependent on him, dependent sister. But the treatment is happening in a nursing home run by government, recognized employer? No. So nursing home will be a private nursing home. Hello? So this will also be taxable. Now treatment of G's brother who is independent. Very good. So independent brother, even if the treatment was done in GRE, still it was taxable. The brother should be dependent. What if the brother was dependent? Then also it was taxable because the treatment is not done in GRE. They have not mentioned it. Yes or no? In both the cases, it is taxable only. Hello, sir. Next one. Treatment of G's father, 75 years and dependent, meaning that G's father is what? Dependent parent. And the treatment is done abroad. What was the cost of treatment? 50,000. So cost of that treatment 50,000 is met by employer. Is it a benefit? Yes. Benefit for cost of treatment is 50,000. Then benefit of cost of stay is 30,000. See, 50,000 will be exempt if it is within the limit of RBI. 30,000 will be exempt if it is within the limit of RBI. But for these two, separate limits should be given, RBI. But they are saying that limit specified by RBI is 75,000, not mention that this 75,000 is for which one? Hello? Then we will have to assume that this 75,000 is the combined limit for these two expenses. If you want us to claim the exemption separately, give us the separate limits, no? If you are not giving the separate limits, what we will assume? That this RBI limit is combined limit for both these expenses taken together. Hello, sir. So in that scenario, what will happen? 80,000 benefit and 75,000 RBI limit. How much will be exempt? 75,000 will be exempt and here only 5,000 will be taxable. Yes or no? So on your calculator, you are going to take 5,000 plus 12,000, 17,000 plus 8,000 will give you 25,000 plus 3,000. It will be 28,000. 28,000 and 6,000 will be 34,000. 34 plus 5, it will be 39,000. So taxable value of this purpose, it will be 39,000. Everyone got this? Sure? Should I move ahead? So this was medical facility. Any of these cases, one case can come in your main answer, main question. In the salary question, any one of these adjustment can be given. Got it? Question number 11 and question number 12. Two questions are there. 11 is also there, 12 is also there. Mr. D went on a holiday on 25th of December 2024 to Delhi with his wife and 3 children. One son, age 5 years, twin daughters, age 3 years. Can I say after one child, twins are born? All the children are born on or after 1/10/98. So after one child, whatever twins are there, they will be treated as a single child only. Yes or no? Now, they went by flight, economy class. And the total cost of tickets reimbursed by his employer was 60,000 for all of them. meaning 45,000 for adults, meaning Mr. D and his wife, 45,000 was reimbursed as LTA, and 15,000 for 3 children, meaning 55,000 each. Compute the amount of LTC exempt if Mr. D exercises the option of shifting out of the default tax regime, meaning that if he will shift out of default tax regime, he is going to get the exemption. So LTA exemption will be available only if you shift out of 115 BSE. What if you don't shift out of 115 BSE, you follow 115 BSE, then the LTA exemption will not be available, that will be fully taxable. Hello sir, everyone. So pay attention. How much LTA received? If the assessee is not following 115 BSE, shifting out, then LTA received was 60,000. Now out of this LTA, some LTA will be exempt under section 10(5). How much will be exempt? A, actual LTA, B, actual amount spent, C is maximum limit in rule 2BA. Now tell me one thing, how much is the actual LTA? It is 60,000 only. 60,000. And 60,000 LTA is given towards the actual reimbursement, meaning the actual amount spent is also 60,000. So actual amount spent is 60,000. And they have spent equal to the economy class airfare only. So what was the economy class airfare? Journey is performed by air. So for that journey, maximum limit is economy class airfare. And that economy class airfare only which they have spent. Hello. And which they are getting as what? LTA. So economy class airfare is also 60. So economy class airfare was 60 only. Maximum limit. Which they spent. Actual spending is 60 only. And which they got as LTA also. So amount received as LTA, every amount is 60 only. But these amounts can be different in this question. Luckily all the amounts are same. Now tell me whichever is lower. So how much will be the exemption? 60. And how much will be taxable LTA? Nil. What if they would have told you that the assessee is following 115 BSE? Then no need to take this exemption, entire LTA taxable. That's it. Sure? 11th question understood everyone? Come to 12th one. In the above illustration 11, will there be any difference if among his 3 children, the twins were 5 years old and the son 3 years old? Discuss. Yes, absolutely. This entire thing would change now. Actual LTA for all of them was 60,000. So either the actual LTA, see 60,000 LTA was there, no? So I will write down for father, mother and 2 children LTA, and for children in excess of what? In excess of 2 children. See, for father, mother it is 45 and for all the 3 children it is 15. So I am supposed to take only for 2 children. So for father, mother 45 and for 2 children 10,000. So it was 55,000. For one child LTA was 5,000. That I am going to write here. Hello? No exemption from here. What did I say? No exemption from here. This will be fully taxable, 5,000. Done. But what about this side? 55,000 spent, 55,000 actual amount and 55,000 was the limit. Whichever is lower, 55,000, this will be exempt. How much will be taxable? Nil. And for the third child, whatever 5,000 you are getting, that will be fully taxable. Got it? Easy? Should I move ahead? Very good. Shri Bala, employed in ABC Company Limited as a finance manager, gives you the list of perquisite provided by the company to him for the entire financial year. Domestic servant was provided. Servant was provided. Meaning this is clause 3 perquisite. At his residence, salary of domestic servant is 1500 per month. The servant was engaged by him and the salary is reimbursed by the company. Okay, if now they are saying that domestic servant provided at home, but that domestic servant was not engaged by the employer and provided. They are saying that it was engaged by him only. Understanding? So if it was the servant was engaged by him only and the salary for that servant was given by the employer, then it is a perquisite. But it is not clause 3 now, because the domestic servant facility provided. But that domestic servant was not engaged by the employer. It was engaged by the employee himself. So employee's liability, employee's obligation met by employer, clause 3 or clause 4? Clause 4 perquisite. So here it will be 17 subsection 2, clause 4 perquisite, and as per this clause, whatever salary paid by the employer for that domestic servant will be his benefit, fully taxable for him. Getting my point? But wait, even if he is a specified employee or a non-specified employee, that 18,000 will be fully taxable for him. Sure? What if in case the company has employed the domestic servant? What is the value of perquisite? Then also the value of perquisite will be same. But now the perquisite will be as per 17 to 3, 18,000 will be taxable. And this 18,000 will be taxable in his hands, assuming that he is a specified employee. Hello, sir. But what if he was a non-specified employee? Then under clause 3, this 18,000 is not taxable for him. So whether you follow clause 3, then also this 18,000 is taxable. Whether you follow clause 4, then also this 18,000 is taxable. But the difference is, clause 4 will come if the servant was engaged by you. Whether you are a specified employee or a non-specified employee, that 18,000 is taxable for you. Clause 3 will come, 18,000 is taxable as per clause 3. But this will come taxable only if you are a specified employee. Getting my point? Is the question mentioning that Bala is a specified employee or a non-specified employee? Mentioned anywhere? So meaning we will consider as if he is a specified employee only. So whether clause 4 or clause 3, the taxable value of this perquisite will remain 18,000 only. Yes or no? Okay. Now free education was provided to his two children, Aarti and Ashok, in a school maintained and owned by the employer. An educational institution which is owned and maintained by the employer, in that school, if the children of the employee are studying and the amount spent by the employer on that educational facility will not be benefit. The reasonable cost of education will be the benefit. Yes or no? But if that reasonable cost of education for one child happens to be 1,000 per month or less, then it will be exempt. But if it is more than 1,000, hello, then two possibilities. Entire amount can be taxed or amount in excess of 1,000 can also be taxed. Did I tell you this? That same point is here. Come. The cost of such education for Aarti is computed at 900 per month. Wait, this is not the amount actually spent by the employer. This is the computed amount, meaning they are telling the reasonable cost only. And for Ashok, it is 1,200 per month. So the amount which was computed for Ashok was 1,200, which is more than 1,000. So 1,200 will be fully taxable, or maximum or 200 can also be taxed for Ashok, and for Aarti nothing will be taxed. Why? Because for her the cost of education is computed at only 900 per month, which is less than 1000. Got it? So here how much will be taxable? Come on, tell me. For Arthi, nothing will be taxable. And for the educational facility given to Ashok, 1200 into 12 will be 14,400. That will be taxable. Got it, sir? Everyone, sir? Should I move ahead? Okay. Now, no amount was recovered by the company for such educational facility from Bala. If amount was recovered, I would have reduced that amount out of the taxable amount. If nothing is recovered, then entire amount is taxable. Got it, no? Next one. The employer has provided movable assets such as television, refrigerator, and air conditioner at the residence of Bala. Provided at the residence of Bala so that he can use, not sold him. So can I say this is the use of movable asset facility? And the actual cost of such assets is 1,10,000. So can I say 1,10,000 into 10% per annum, assuming that the assets were used for the full year. So the amount will be how much? Taxable amount will be 11,000. 11,000 you got? Everyone? Next one. Gift voucher worth 10,000. On the occasion of marriage? No, read further. Marriage anniversary. Not on marriage. Marriage anniversary. So gifts on marriage is not taxable, but the gift received on marriage anniversary are taxable. And if they are provided by employer, will be taxable under the head salary. Getting my point? Provided by others, then other sources. But if it is provided by the employer, then it will be taxable under the head salary only. Now, is the entire amount 5,000 or less? No, the entire amount is more than 5,000. Then the full amount can also be taxed and excess can also be taxed. How much you will tax? Full amount will tax full amount 10,000. Done or no? Okay. The telephone provided at residence of Sri Bala and bill aggregating to 25,000 paid by the employer. Yesterday, we did one facility. All the notified perquisites benefit under clause 8. Interest benefit was there, credit card facility was there, club facility was there, gift was there. Last point was there. Any other benefit, amenity, facility, yes or no? Even that is treated as perquisite in the hands of employee. So this is any other benefit. But it is very difficult to identify that out of this perquisite, how much is personal and how much is official. Hello, sir. So whenever the telephone facility is provided, mobile bills are paid by employer, mobile or telephone bills are paid or reimbursed by the employer, telephone facility given by the employer, such type of benefit is fully exempt. Getting my point? Hello, sir. Kaushik, is it visible now? Nothing is visible. Since when? Right now only it has happened? Or since the beginning only? So there might be some network issues. Wait, let me check. Okay. Now is it okay? Please check. Connection is unstable. So let me continue a little bit. Maybe the network will get, but are you able to listen to me properly? And seeing that same thing in your textbook also? Perfect. Getting everything, no? Okay. Pay attention. So whatever telephone facility is provided, telephone bills paid by the employer, mobile bills paid by the employer, or it is reimbursed, that is a perquisite. Perquisite coming under clause 8 only. But since it is very difficult to identify that how much will be the personal benefit out of this perquisite or how much will be official, because telephone use is for both official and personal. Getting my point? So in order to avoid further problems between the assessee and department, what the law says that this benefit given will be fully exempt. But if the telephone allowance would have been given, that would have been fully taxable. Yes or no? But telephone allowance is not given. Telephone facility. Telephone bills are paid by employer. Telephone bills are reimbursed. Mobile bills are paid or reimbursed. Then it will be a facility fully exempt. So how much will be taxable here? Nil. This 25,000 will be fully exempt. Getting my point? Next one. Housing loan 6% per annum. Now for this, you will have to make the calculation. What calculation you will have to make? Every month end, what is the outstanding balance of loan? On that interest benefit you will have to calculate, because the loan was 6 lakh. And every month 12,000 rupees principal is repaid 5th of each month. So can I say on 30th April 6 lakh will not be outstanding. 6 lakh minus 12,000, 5 lakh 88,000 will be outstanding. Yes or no? Then next month again 12,000 will be repaid. So every month the loan amount will keep on changing. So every month, see, the last day the loan amount outstanding will be this much. Done? And how much is the interest benefit? See, the employer is charging 6%. And what is the SBI's prime lending rate? They have given the lending rate of State Bank of India is 10%. So reasonable rate is 10%. Employer is charging how much? 6%. 4% benefit is there. So for every month 4% will be benefit into 1 by 12. Yes or no? Into 4% into 1 by 12. Into 4% into 1 by 12. You will get all these benefits every month. So now if you total, you will get 20,880. Getting my point? So can I say here the taxable value of this perquisite will be 20,880? Now please, on your calculator, take 18,000 taxable value of domestic servant facility, 18,000. Then take educational facility, 14,400 on your calculator. Then add 11,000. Use of movable asset, yes or no? Add 10,000 gift. Then add 20,880. What is the final amount? On your calculator, you must get 74,280. Are you all getting it? This is the taxable value of all the perquisites which he is receiving from his employer. So this amount will now be taxable under the head salary. Got it? Everyone? So 21 done. Sure. Now I'll discuss 23. Come on. X Limited provides the following perquisites to its employee, Mr. Y. Accommodation taken on lease by X Limited for 15,000 per month, rupees 5,000 per month is recovered from the salary of Mr. Y. This is accommodation facility. Do you remember accommodation? Hello, sir. What was the accommodation facility? Did I tell you that accommodation is given to the employee who is a government employee? Then the licensing fees will be taxable. But if it is given to a non-government employee and the accommodation was owned by the employer, then you have to see the population of the place where the accommodation was given. Based on the population, 10%, 7.5% or 5% of salary will be taxable. But if the accommodation was taken on rent by the employer and provided to you, then for that accommodation 10% of your salary or actual rent paid by the employer, whichever is lower, that will be your benefit. Yes or no? So here they are saying that the accommodation is taken on lease by X Limited, means that the accommodation was taken on rent by the employer. And that accommodation, how much rent was paid? 15,000 per month. That was given to you. So for this, 10% of your salary needs to be calculated, or 15,000 into 12, 1 lakh 80. So 1 lakh 80 or 10% of your salary, whichever is lower. That will be your benefit. But wait. First you'll have to calculate the salary. And in salary you are taking everything other than those 5 things. Do you remember? DA not in terms, employer's contribution to provident fund. Then third one was value of all other benefits. Fourth one was the exempt portion of allowance. Fifth one was lump sum retirement or retirement benefits. Ignore all these 5 things. Take all the salary on due basis from all the employer. And this salary must become due for the period for which the accommodation was occupied. Do you remember this thing? But wait, this we are going to calculate in the end only. Till the time I will not solve the entire question, I will not be able to find out that salary. So let's come to this part, first part, later on in the end. Okay, so first let's complete everything else, but we know that how much amount should be taxable here. How to calculate that we are going to calculate later on, but how much will be taxable that we know. 10% of salary or actual rent paid by the employer, 1 lakh 80, whichever is lower. But 10% of salary will be calculated in the end. So the value of this perquisite will be calculated at the end. Got it? So pay attention now. Furniture for which the hire charge is paid by X Limited is 3,000 per month. No amount is recovered from the employee in respect of the same. 3,000 per month into 12. So this furniture which was given, the rent paid by the employer was 3,000. If he would not have paid this rent, you would have paid. So are you paying? No, employer is paying this rent. So you are saving this rent. This is your benefit. So 36,000 will be for use of this furniture. This 36,000 will be taxable for you. Done. Next one. A car of 1200 cc which is owned by company, owned by employer, given to employee to be used both for official and personal purpose. Can I say partly official, partly personal? Now for this car, see, all the running and maintenance expenses are fully met by employer, and he is also provided with a chauffeur, meaning that he is having 2 benefits now: use of car belonging to the employer and expenses also met by the employer, including driver's salary. Both the benefits taxable minus the recovery. Fully taxable if the car was used fully personal. But this car is used partly official, partly personal. So this benefit need not be calculated. A fixed amount is taxable. And that fixed amount will be 1800 or 2400 depending on the engine capacity. Plus 900 extra you will have to do because the driver's salary is also paid by the employer. Hello sir. So how much will be taxable? 1800 because the engine capacity was less than 1600 cc plus 900 also, meaning that 2700 per month into 12. So can I say this will be 1800 per month plus 900 per month multiplied by 12 months. How much you will get? 32,400. Everyone got this? A gift voucher of 10,000, meaning that entire 10,000 will be taxable. Compute the value of perquisite chargeable to tax for the assessment year 25-26, assuming his salary for perquisite valuation to be 10 lakhs. See how good this examiner is. He is telling you that for the purpose of valuing the perquisite of accommodation, his salary has to be taken as 10 lakhs. So 10% of 10 lakhs will be 1 lakh. Either 1 lakh or 1 lakh 80,000, whichever is lower. So that 1 lakh will be his benefit. And but out of that, the employer is recovering something. How much recovering? 40,000. Sorry, 60,000. 5,000 per month is recovered. No, 5,000 into 12 will be 60,000. So here it will be 10% of 10 lakhs, which is equal to 1 lakh, or 15,000 per month into 12 months, which is equal to 1.8 lakh. So 1 lakh or 1.8 lakh, whichever is lower, 1 lakh will be the benefit. And out of that 1 lakh, 60,000 is recovered. So how much benefit? Only 40,000. Got it? Now can you add all these figures? You will get 1,18,400. Everyone should get this answer. Value of perquisite chargeable to tax will be this much. Are you getting 1,18,400? Please check the total. Bro. Done. Easy question, no? This type of question will not come in the exam. All these perquisites will be forming part of salary chapter, salary head. So when you will be calculating the salary income, no, all these perquisites will be there. So take these values in the salary statement along with basic, allowances, what do I say? Basic, allowances, commission, bonus, and these amounts will also come in the salary statement. Then your total salary will come. From that you are going to take the deduction and the final income will come. All these cannot come. Any one of them can come. Or these will come and few more will come. It can be anything. Done, no? Okay, so this was your question number 23. So 21, 22, 23 all done.